All right. Good morning, everybody. Welcome back to another episode of the Market Open. We are here today. It is May 7th, and we got a lot of stuff to talk about. We had a bunch of earnings this morning. I didn't even know we had these many earnings. We had Uber, we had Disney, we got a couple other companies we got to talk about that just reported this morning. We have a ton of earnings after the bell. We had AMD from last night, which is going to be really important, so we'll be talking about them. And then we had a massive update in the context of China, which, if anyone's wondering why the markets were pumping yesterday overnight in the futures, we got a really good update on China, like a really good update. Now, it's a very minuscule update given all the different things we've heard over the past couple of weeks in terms of trade deals that are eventually happening. But it seems like this one, it's like the boy who cried tariffs. It seems like this one is the one where we are going to see a more reasonable approach towards a tariff deal getting done. We actually have some specific details on the tariffs that we'll talk about in just a bit. And if that's the case, then I think that can be really good for markets, and markets are acting like that's going to be really good. So we'll be talking about that, getting into all of that. We've got some updates on Grab in the pre-markets. I think some of you guys have seen these headlines. Let's just say this Goto deal looks like it is possibly happening. So we'll talk about that and go deeper into it as well. And then outside of all that, we got a pre-market that is relatively green. So we'll be analyzing how these stocks react when the market opens. Now, JPow, how could I leave that for the end? I guess last but not least is speaking today. JPow. Oh, Disney. Yeah, we had Disney earnings as well. JPow speaking. Wednesday FOMC meeting. I'll be live at 2:20 p.m. Eastern. JPow goes live at 2:30. The announcement of the Fed rate cut will be happening at 2 p.m. Eastern. It's likely going to be a pause, likely not going to be a cut. I don't think he would hike rates. That would be a little, that would not be the best for the markets, but he's not going to cut. So really, it's not even about if he cuts or if he pauses. It's more so about what is his tone in the meeting. This is why we care about every syllable that he says in terms of if he's going to get closer to a June cut. And if he does, then that's bullish. If he doesn't, that could be technically bearish. So anyone trading today, I mean, realistically, you're trading against JPow's words at 2:30. And based on what he says, that'll probably be affecting the broader equity markets as well. So we got a lot of stuff. We got a lot of stuff to talk about. Thank you, everybody, for being here. Gurjop, thank you for the 5 gifted memberships. And Albert, thank you for the 20 gifted memberships. You guys do not need to do that. Very, very thankful that you guys are giving these memberships. So a bunch of you guys in the chat just got memberships. William, you just became a member. Nick, you became a member. Kris became a member. Bob, you got a membership. Kris, you got a membership. Matthew got a membership. Thank you all for the 25 gifted memberships. Appreciate you all being here. Before we get into it, real quick, Bloomberg interview yesterday. First of all, just want to say thank you guys from the bottom of my heart for all the support that everyone's been giving. I wrote up a post on X last night for those that want to read a little bit more about the entire feeling and process of it. I actually spent a good 20 minutes yesterday on the market close. If you go to the end of the close at the last 20 minutes, talking about just the experience of what it was like. Just TLDR, super fun, super cool. Yeah, I've never done mainstream media before. I was really nervous until the first question, and then I just got into it, and it felt like I was talking on YouTube normally, and it didn't feel that scary or kind of like anxious anymore. And the level of support that people have provided in terms of just like being happy for the journey. I mean, there's just literally thousands of comments. I was up till, again, 2 a.m. last night. The cough is getting better, by the way. I've been taking some Mucinex, so it's still a little raspy voice, but the cough is getting better. And I was just reading comments. I was just reading everyone's comments, and the amount of love and support. Words do not do it justice for me to be able to say thank you or how humbled I am by the amount of people that truly just have been here for the past 4 years and are happy to see me win. It's very rare to get people to see you happy win, to be happy to see you win on your journey, and a lot of you guys are. So I appreciate it from the bottom of my heart. Hopefully we do a lot more of these TV appearances and, we get the name out there, we build the brand, but I think this was the good first step. There were a little bit of mispronunciations out there. I think I talked a little fast in certain areas, so it definitely wasn't perfect, but I think it was a good first showing for the community. And I think it's a big win for all of us in the community, more so than me. There is no me without you guys. And I think for the Palantir community in particular, the fact that, mainstream media cares after 5 years of really not thinking that Palantir was anything special, it's just been amazing. It's been really, really amazing. And I'm very, very grateful for the journey. So Thank you, everybody, for being here. Thank you, thank you, thank you. Also, Walt, thank you for the $5 super chat. I am not CEO of AK Media. They just needed a title. So for all of you guys that keep asking, how do I invest in AK Media? There is no AK Media. There's no LLC or C Corp called AK Media. It's just something I needed. But now you guys are calling me the CEO of this every day. I'm not even a CEO. I'm just like, I'm a mitt. So I appreciate everyone reaching out and saying, congrats to CEO of AK Media. But there is no AK Media. I just needed a title. Shem Pasta, thank you for the $10 super chat. Albert, thank you again for another 20 gifted. I think you got Gurge up a little mad because he gave 20 gifted as well. Goodness gracious, dude. You guys just gave 65 memberships between the two of you to everybody in the chat. You don't get anything for being a member. There's no exclusive content or anything. It just supports the channel for $5 a month. So appreciate you, Gurge up. Appreciate you, Albert. And 65 of you just got memberships. So thank you, guys. Thank you for the memberships. All right, let's get into it. First off, the China deal. We got some major updates on that, and the market really likes it. Let's get some coverage there, and then we'll keep going from there.
And U.S. Trade Representative Jameson Greer are going to meet with China's lead economic representatives in Switzerland this weekend. Megan Casella joins us now with more. Good morning.
Hey, Joe, good morning. So the possibility here for a real step forward between the U.S. and China with this meeting. It's set for Saturday and Sunday in Switzerland. And this is really the first confirmed meeting between high-level officials on both sides since the tariffs were announced. And it's the first real sign in months of momentum in U.S.-China trade negotiations. The news of it yesterday came just after Bessent told lawmakers earlier in the day that trade talks with China had yet to begin. And Bessent last night appeared to sort of downplay expectations for this meeting, but he did say everything is on the table.
What we're going to do in Switzerland is we've agreed to talk. Then on Saturday and Sunday, we will agree what we're going to talk about. My sense is that this will be about de-escalation, not about the big trade deal. But we've got to de-escalate before we can move forward.
So it's not a trade deal yet, but markets love it. I mean, they absolutely love it. You could say some of it's priced in for 100%, but the fact that Bessent's saying, hey, we're going to go to Switzerland, we're going to get some nice Swiss chocolate, I'm going to talk to the Chinese vice premier, I'm going to tell him we got to de-escalate, we're going to set the parameters and framework for what it means to negotiate, and then hopefully by the end of May, early June, we have some real negotiations set up. I mean, markets are going to start pricing that in even more aggressively. If JPOW is even a little bit dovish today, you have lower rates, you have a trade deal with China. I mean, there's a world where maybe we set up for a little bit of a run going into the summer.
Now, one tangible outcome to watch for here will be whether the two sides agree to bring tariffs down from where they are now at 145% and 125%. Bessent told me about 2 weeks ago he believes that's the necessary step before broader talks can begin. And the president has been resistant to this, but China has also called for that, for lowering tariffs as a way for the U.S. to show sincerity. Now, overnight, China's Commerce Ministry also laid out a longer set of stipulations. They say if the U.S. wants to negotiate, it must face up to the serious negative impact of unilateral tariffs on itself and the world, correct its wrong practices, and meet China halfway. Guys?
Fingers crossed. I guess we could conjecture and give our own opinions on what the likelihood, but I think, Megan, it might be best just to wait and see what happens.
And look, I agree. Obviously, we should wait and see what happens here, but you can't blame the markets for getting excited. S&P 500 right here in the pre-markets. Last night, it was up about 1%. Palantir is down about 0.6. S&P is up 0.39. So it's not like the markets are maintaining the level of pump they had immediately when the news was announced. Robinhood's up a little bit right here in the pre-markets as well, up about 1%. But it's really good news, dude. It's really good news. I mean, there's nothing bad about this. The de-escalation of tensions with the two world's largest economies, that one needs their labor, the other one needs their consumer, going back and forth is not healthy. We need some level of the beginning of a framework and a foundation to put an end to all this. And it looks like in Switzerland from May 9th to May 12th this weekend, Bessent's going to be trying to make that happen. And China confirmed this as well. So Chinese Vice Premier Lei Feng posted yesterday on X that he is ready to talk to Bessent in a fair and reciprocal way. And they're ready to hopefully get something done in regards to finally beginning the process for negotiations. So that is bullish. And Now it depends on JPow today, how hawkish or dovish he's going to be. I'll talk more about my thoughts on JPow in a bit. I kind of think he's going to be more hawkish than dovish, unfortunately. But if we get any resemblance of rate cuts over the next couple months with a China deal, I think that would be relatively strong. All right, real quick update on Grab. Stocks up right now in the pre-markets. Why? Reuters is reporting that Grab is in talks to acquire Goto in Q2 of this year. Look, this would be a big deal for Grab. For those that have been keeping up with the story, Grab, oh wow, we're above $5. All right, up 4% in the pre-markets. This would essentially solidify their ability to maintain pricing power and not have as aggressive as margin compression as they've been having over the past couple of years, because they're going to take over one of their biggest competitors that does about $1.5 billion in revenue, that has 100 million users, and that is in one of the biggest markets in Southeast Asia, which is home to over 300 million people, which is Indonesia. So it looks like this has a real shot of happening. The Reuters report simply says that Grab has hired advisors to work on the proposed deal. The two sources added, the deal is subject to terms such as financing, which Grab is in discussion with banks. One of the sources added, we know that from a Reuters report back on March 28th, that Grab is looking to have a $2 billion loan. They already have $6 billion in cash. The acquisition would likely be around $7 billion. Goto's value in the public markets in Indonesia is about $5 billion, so they'd be paying a $2 billion premium. Goto is down 30% from when or 80% from when they went public back in 2021. They don't really have a path to profitability. I looked at their numbers. They're just not going to be a company that can meaningfully deliver shareholder returns. I mean, if Grab has been flat for the past 4 years and Grab is way more diversified and way bigger of a business than Goto, how is the Indonesian version of Grab going to be able to actually deliver shareholder value? Like, it's just not going to happen. And sometimes it hits you in the face. It becomes a reality. The institutional investors that are SoftBank, Alibaba, et cetera, they're probably looking at their investments and saying, it makes more sense for you guys to just join together. And so I think from a regulatory perspective, the big guys have talked to the regulators. Grab's founder, Anthony Tan, is very politically connected in Singapore. He's probably doing well talking to the regulators. And then the Indonesian government, as much as they value one of the largest tech companies inside of Indonesia, they also know that there's just no way for this to meaningfully scale. And they're probably starting to get on board with the acquisition. So I think it would be a great thing for Grab. It would be very smart. Again, the company did not buy back a single share, even though their stock got to the low threes in Q1. Are you kidding me? There's just no way you don't buy the dip when you have 250 million authorized to buy the dip, unless you really need the cash. And the fact that they need the cash is likely because they are making a very big investment. And that investment would be to take out their biggest competitor. The fun part about investing is around taking the risk, even without knowing all the answers. So, I mean, no one knows if this is actually going to happen, but if it does, I think it could change the entire trajectory of this company rather quickly. I mean, my evaluation model that assumes $10 by 2027 didn't even take into account an acquisition of this type of magnitude. So I think it would be very bullish if it happens. And the question is just going to be ultimately if it can play out this way. It's going to be exciting. It's going to be really exciting to see this play out. All right, so that is the Grab update that we have right now. Dens, thank you for the $5 super chat. Congrats to our leader of the retail army. You give us the conviction to hold through the bad times and keep us grounded through the hype. Thank you. Thank you for the super chat. And, you know, realistically, I think someone was talking about this last night. I think the conviction to hold through the bad times has to be a community-driven effort. Like, even I would have lost a lot of my conviction back in 2022 on Palantir when things were so bad, unless I had people like Sachin and Sean and Arnie and all these guys that I was talking to every week that were consistently, you know, helping me understand the bull case as well. So holding through the bad times is always a community-driven effort. And then celebrating the good times when things go green is just more fun when you're with the community. Grab right here, up 4%. Nebis Group, this is a semiconductor company. They are mooning in the pre-markets, up 9.18%. Why is that happening? Well, Bezos is investing. Bezos is investing. So Jeff Bezos is putting in $72 million of capital into this bad boy. And as a result, you're getting some momentum. So Nebis right here announced a strategic investment in Tokolo, its AI data solutions business led by Bezos Expeditions, the investment arm of Jeff Bezos, with participation from Miklain Parkane, the CTO of Shopify. As a part of the deal, Nebis no longer holds a majority voting power in Tokolo, meaning Tokolo will be deconsolidated from Nebis's financial statements. So I mean to say Nebis is investing in another company led with Bezos. Bezos is not investing in Nebis, but the Bezos connection, along with what the investment would be for Nebis in and of themselves, is getting the market pretty excited right here in the context of in the context of the share price. Now, what is Tokola? Apparently, these guys are an AI development and LLM fine-tuning company. Nebis, I am not an expert on what they do, but I know they're in the data center space, semiconductor space. They do a lot of stuff with AI. NVIDIA invested in them a while ago. That's what got people really excited as well. So Tokola seems to be a company that uniquely is evolved in terms of fine-tuning LLMs. And it looks like this investment from Nebis with Jeff Bezos is what's getting the market exciting. I don't really know how big of a deal the investment is or why it really matters to Nebis, but the market believes that it matters, up 9.2% right here. This one's been relatively flat. It had a big move back in January, February, then has been kind of subdued over the past couple months, but it looks like this acquisition is getting the market exciting. Now, another thing that is happening in terms of acquisitions, or at least companies disclosing some ownership in shares, AMD. A company decided to invest in AMD yesterday. And let me pull up the filing right here. You guys might know which one I'm talking about. Of course, I'm saying Nebius wrong. Of course, I would be saying it wrong. The Bezos family office being charged $700,000 annually to have a $70 million investment. Yeah, the family office fees are crazy, dude. You want to get rich in this country, bro? You start a freaking family. You manage a family office. The fees you make on managing high net worth people's money is pretty insane. All right, AMD, Amazon. Amazon bought 822,000 shares. Amazon bought 822,000 shares. AK Media did not buy 800,000 shares of AMD. You guys are not going to let this joke go, bro. You guys are not going to let this joke go. But Amazon decided to make an investment in AMD. Look, it's not like it's the biggest investment in the world, given Amazon's market cap is $2 trillion. This was disclosed on the 13F, so I believe the investment happened probably over the past couple months. We're going to get a lot of 13Fs and 13Gs in the next week. We haven't got the big ones yet, like the Ackmans, the David Teppers, the Howard Marks, but we did get a couple smaller ones last night, and so we should be seeing a lot more of them soon. But it looks like they are taking a chance on Lisa Su. Amazon is one of the main companies that's spending on CapEx, building out their own data centers. You would imagine that maybe there's some synergies that they see in Lisa Su and AMD. If maybe they want to diversify a little bit from NVIDIA. There's going to be a ton of reasons why they're buying AMD. Maybe they just think it's undervalued and they want to have more exposure to a stock they think that is going to be pivotal towards the AI revolution. And that's why you have this Amazon investment. Obviously, AWS, growing the way that it's growing, that could be playing a role here in terms of they just want more data center capacity. They want to have better access to companies that they're procuring chips from. And that could be a reason why they are buying AMD. Now, in terms of AMD as a stock, unfortunately, it's only up 1% right now. It was up 5% yesterday after hours. But on the call, the CFO did say that their data center revenues are going to be flat to negative in Q2. Now, that's weird because their overall revenues are going to beat in Q2. The analysts expected 720 million. AMD is expecting around 700 to 740 million. So there's a range, but they're likely going to beat on those expectations. So they're going to beat overall Q2 revenues, but data center is going to be flat to negative is what they guided. And as a result, the street got a little bit upset about that. That's when the stock went red. 96 cents versus 93 on EPS, beat by 3%, and then 7.4 versus 7.12. They beat by 4% on revenues. So, I mean, look, it was a good quarter. The call was good as well. It's just that data center guidance was not good. That actually made me a little worried about NVIDIA in terms of why is AMD guiding for flat to negative Q2 data center revenues? Now, my belief is that NVIDIA is getting more of that demand, right? This is not an industry problem. This is more maybe an AMD issue this quarter versus an NVIDIA issue. We'll find out on May 28th if this is a structural problem for data center demand or if this is AMD versus NVIDIA. I would imagine more it's AMD versus NVIDIA because all the big hyperscalers have said they've reaffirmed their CapEx. Zuck's raised his CapEx, and most of that money is going to the latest architecture of chips, aka Blackwell. So I would imagine that NVIDIA is still going to be doing okay. But that is the reason why the street was just not that happy yesterday because of the lack of guidance on data center revenues for AMD. Overall, though, it was a great quarter. I mean, AMD, if you look at the growth rates, I know Q1 was like a really easy comp for them, but they're growing triple digits across almost every category. So it was an incredible quarter. I mean, I was looking at the numbers like this thing could be up 20%, right? These are crazy. But that guidance on data centers is the biggest thing that the street wanted. So You had everything going in the right direction. Revenue was up 36%, operating income up 2,000%, operating margins up 10%, diluted earnings per share up 529%. Net income went from 123 million to 709 million, up 476%. It was a great quarter. And even quarter over quarter, they were up 47% in net income, 52% on EPS. Like, it was not a bad quarter. It was just that guidance on Q2 that wasn't the best. But outside of that, that's what we got in the context of AMD. SMCI also missed on revenue. They beat on EPS. I still don't know how they beat on EPS. I have to go through their numbers, but they beat on EPS by 50%, 32 cents versus 20 cents expected. This stock is down 6.44% in the pre-markets as well. So again, a quarter that, even though they gave preliminary guidance a week ago, that wasn't good. Street still isn't that happy with the numbers that they put up, even though they had a nice beat on EPS, but it just wasn't enough to get them excited about the current state of their quarter and their business as well. All right, let's talk about the earnings that we had today. Let's talk about the earnings that we had today. We got a headline right here. Amazon plans to invest $4 billion to launch infrastructure region in Chile. I think I saw that this morning. So that is a good thing for Chile. I don't think it's going to be moving the stock on Amazon. They've announced a bunch of these different data center plays across the world. Amazon right here up 1% in the pre-markets. It just goes to show across the world, you need more data centers. And it looks like Amazon is ramping it up. All right, here we go. We got 3 different earnings. First of all, Disney's moving in the pre-markets. Disney's moving in the pre-market. It's Chile, right? It's freaking Chile. It's not Chile. You can't make fun of how it's not free. If I said Chile, I would get it's Chile. So for all the people making fun of it in the chat, that's how you say it. It's not Chile. I should have said Chile. That would have been funny, but it's Chile. And if it's not Chile, then I don't know how the hell you say it if it's not Chile. So I hope I'm right on that. Disney, they beat EPS 20%, 145 versus 121, revenue 2%, 23.6 versus 23.1. Disney has not really had a big move on their stock in about a year. This bad boy is up 9%. 9% right here. I mean, Disney hasn't moved like this in a while, bro. Disney doesn't, you could have a good movie, a good box office showing. It doesn't move. So I guess the street was really happy, in particular with their parks business, that I think led to a decent chunk of this beat. And as a result, you got a nice 20% beat on Disney right here. Then you got Unity beat by 50% on EPS. Again, a lot of these companies, I don't have the aggregated data yet, but a lot of these companies, they're missing on revenue slightly and they're demolishing EPS. I know it's pre-tariff, so you got to take that with a grain of salt. And hopefully with this China deal in Switzerland, maybe we start to walk back the tariff volatility. But companies are beating on EPS, and they're beating pretty dramatically. 49%, 19 cents loss versus 37 cents expected on a loss. 435 versus 436 million. In terms of Unity, their stock right here is up 2%. And then finally, you had Uber, which is down 3.7. Uber had a little bit of a miss on, I believe, revenue, but again, very small miss. EPS 67%. They beat 83 cents versus 50 cents. Again, another company that's beating on EPS, on earnings, and then missed by revenue on 1%, 11.5 versus 11.62. That is inconsequential. If the stock's down because they missed by 1% on revenue, then that's just stupid. But beating by 60% on EPS, I mean, Meta beat by 23%, Amazon beat by 17%, Google beat by 40%. You've got pretty much every company that matters is beating earnings expectations. And I don't know if that's going to continue into Q2, but if it does, and you get a trade deal, and you get Jay Powell saying maybe it's time to cut rates because we shouldn't have the federal funds rate double the rate of inflation. I think we get CPI next week, so that'll even more solidify, hopefully, the prospects of a rate cut. I mean, I don't know how the summer doesn't get that bullish. There's obviously definitely some bearish arguments built in structurally in regards to the labor market might end up getting really weak, which is good for rate cuts, but not good for the economy. Companies might be so affected by the tariff volatility that Q2 earnings might suck. The airlines might not have the demand. Same thing with the cruise lines, although oil prices are coming down, which is really good for their input costs. That's kind of a hedge against the consumer demand that'll be coming down. Rate cuts will be unlocking the mortgage market. I mean, there's a lot of things that could be bearish, but a lot of things that could hedge against that bearishness and lead us back into what could be a momentum-based bull market, along with the fact, and I talked about this on Bloomberg yesterday, hedge funds are short. And if we start getting back up to that 200-day moving average, 570, 580, you're going to get hedge funds that are like, we can't afford to be short, not in a technological AI revolution that might have a small mini recession, but it's not going to have some cataclysmic recession. We've got to get exposure. And that exposure will create even more momentum on a lot of these equities that even have had a run, but are still not back at all-time highs. So I do think that the summer is setting up to be exciting, but we got to get a lot of things to go our way to make this play out. So there you go. That's what we got with earnings this pre-market. Currently right now, yes, I covered the Grab Goto acquisition. If you rewind about 15 minutes, we talked about it. I think it's a big deal. I think it could happen. And Grab stock right here is acting like it might happen as well. By the way, I looked at Grab's institutional ownership yesterday. It's at 82%. It was at 78% 3 months ago. So we're getting a lot more 13Fs and 13Gs. I mean, the big boys are buying. Stock's really not moving until you get that big catalyst, but I think people are loading up. And the question is just going to be when that catalyst ends up playing out. Kalpash Patel, thank you for being here. I've been watching your videos for free for a couple months, but your achievement in the Bloomberg interview yesterday finally convinced me to become a paid member. Kudos to you on your success. Kalpash, thank you for being here. Your last name is a last name that is similar to one of my best friends, who is also known as Kris Patel. If you've been here for the past couple months, then you've probably heard him on the show. Really appreciate you. Again, appreciate everybody from the bottom of my heart for reaching out on the Bloomberg interview. It was a big deal. I didn't tell my mom about it, so when I went downstairs yesterday after the market closed, she was like, oh, you think you're getting big enough where you don't need to tell me about these TV appearances anymore? And the reason I didn't tell her is just because, like, there was just so much going on. It's like, how do you even tell your mom you're going to be on TV, right? Because she's going to want to know how this happened. It was like a long story on how it played out. She just came back from Germany a couple days ago. She left her phone in Germany. I had to get her new phone. So there was so much going on. I was like, you know what? Let me get this over with, and then I'll tell her after. But now that I'm moving out and, you know, moving on with my own life as an independent human being, she's starting to think that I don't care about her because I didn't tell her about the TV appearance. So I gotta make sure that mom knows everything before even you guys know what's going on. So it was good, dude. It was a big deal. It was awesome. It was fun. Dad was super happy about it. My dad was like, so did you speak to Mike Bloomberg? My dad's like, what is Bloomberg? He's like, what is this? I was like, so it's this company. They sell all these financial products. They have a TV network. He's like, oh, okay, cool. Awesome. So my dad gave me the Indian head shake, and my mom was mad that I didn't tell her. So that was their reaction. But in all honesty, they were super happy about it, super excited. I mean, really, the thing that my mom was happy about is that she saw all of your comments. Like, she reads all the comments that you guys do, and when she saw all of you guys just, like, you know, saying how happy you were for me being on TV, you know, that she was just like, wow, people really are invested in your journey, your process, and they care about you. And you know, even she recognizes how rare and how special it is for thousands of people across the world to actually care about someone else and their journey and genuinely be happy for their success. It's very rare for that to happen, and I don't take that for granted. It's just something that doesn't happen all the time. And so truly, 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 from the bottom of my heart, thank you, everybody, for being here. And yeah, thank you for being on the journey. It's a big step for all of us, and I think we can take it to even higher levels as we get into the future. K. Roger, thank you for the $50 super chat. You've made a profound impact on how I evaluate companies for investment. Thank you for the clarity, wisdom, and endless raisin jokes amid. K. Roger, thank you for appreciating the raisin jokes. I thought it was a good one last week. I appreciate you. Thank you for the super chat, and thank you for being here. Now, you guys have made a profound impact on how I evaluate companies. I mean, we got Nate in the chat right here. He has made a profound impact on me having an opportunity cost of not investing in HIMS. I mean, this thing pumped 20% yesterday. It's down about 3% right now. You would think that within this community, someone like Nate would give me the alpha on having a better understanding of investing in a company that's 30% short, but growing 111% year over year, led by a founder, et cetera. But, you know, sometimes sometimes I shouldn't say he, but people want to be greedy and they want to hold things to themselves. So really appreciate the entire community for being here. Appreciate you, Nate, for not letting me know about HIMS. And yeah, we're just going to keep doing this as a community. HIMS right here, 4810. All right, so I want to say a quick thing on HIMS, and then we'll get into some other macro data. I am very impressed by something I saw last night on HIMS. Very, very, very impressed. I've not taken a position yet, but I want to bring this to everyone's attention because to me, it looks like this company is headed in a really good direction based on something that I saw last night. And by the way, I'm kidding about him, kidding about Nate. Nate is a big HIMS bull. He's a good friend of mine. Nate's Twitter right there in the chat. If anyone cares about HIMS, please make sure to follow this guy. This guy knows about HIMS very well, and he's been doing DD on them for like the past couple of years now. So that's his Twitter right there. Okay, so what did I see yesterday on HIMS? So apparently on the earnings, HIMS posted their 2023 revenue, right? Their 2023 revenue goals. And some would say, hey, that's a red flag, right? Why is this company showing their 5-year revenue projections that Amazon's not doing that, Microsoft's not doing that? This company is obviously trying to pump their stock. They're trying to get people excited about revenue in 2030, and as a result, that's a red flag, right? That's one red flag that if you didn't know about this company, you would say it feels a little weird, feels a little bearish, right? Apparently, Hims House, which is this like online community account around Hims, they have this podcast as well about Hims. They pointed out back in Q4 of 2022, Hims laid out 2025 targets, 1.2 billion in revenue and 100 million in adjusted EBITDA for 2025. They didn't just meet them, they went on to obliterate them, hitting the revenue target 5 quarters early and EBITDA 6 quarters ahead of schedule. Given Hims' track record, these 2030 targets shouldn't be seen as a stretch or a red flag. They should be treated as the base case. Okay, why was this really impressive for me to see last night? And I'm sorry for the bots in the chat. YouTube has got to do something about them, but please do not buy XA132Z coin. Please just please do not buy that or look it up or try to buy that because it's all bots right here in the chat. Why that impressed me? Okay. I think what Hims is becoming is a retail community that is very similar to Palantir. I mean, if you were new to Palantir a couple years ago and you saw the company put out certain metrics or they talked about SPACs, yada, yada, you would say, oh, it's all a red flag. This is weird. This is bad. This is like a weird type of reporting financials. This is something that I want to stay away from, yada, yada. And if you listen to like people in the community, like Arnie, who was actually speaking about why they're investing in SPACs, all this stuff, you would know, oh, wait a second, stock's at $10 and it's not a scam. They just have a different way of doing stuff. And for Hims, I feel like that's kind of what's happening right here. This community is growing in such an organic way. Andrew Dunham, the CEO of the company, went on their podcast. Apparently, I found that out yesterday, that he actually embraced this community and he gave them the time of day by showing his appreciation, by going on their podcast, answering their questions, etc. And then you've got a lot of these people that are crowdsourcing all this due diligence to try to combat a lot of the negative bear cases that, quite frankly, aren't even that bearish. They're just kind of stupid when you think about the arguments that they put up against Hims. So my point here, again, I'm not buying the stock right now. My point is just, I think it's really hard to bet against a smart, passionate retail community that is being embraced by not only the CEO, but the entire company themselves. I don't think that's a red flag. It's a red flag when it's GameStop and AMC and they're diluting you. It's a green flag when the CEO says, hey, you guys spend every freaking day talking about my stock. Let me give you 30 minutes out of my 90-day quarter to just show my appreciation for you guys, show you guys my backstory. He's also a founder, so he probably cares about telling his story. And then the company results, the actual earnings were phenomenal that we talked about yesterday. So yeah, I thought it was, I'm just becoming more and more impressed by Hims as a community. And I think for people in that community, that's what's going to help keep the community grounded and get above this 30% short interest, which if there was any red flag, it's 30% short, because I'm still thinking there is a reason why it's sold short. Maybe it's just people are stupid. Maybe it's because there's something deeper here. Kind of leaning towards people are stupid now, given I'm seeing the results. But outside of that, I think the community is growing more and more, and it's getting very excited to see their progress as a community that's crowdsourcing a lot of this due diligence. Palantir right here, 107.47. That's down about 1.28%. SoFi right here, 12.68. I want to talk about SoFi in a second as well, because I've looked at a couple things last night that are important to think about when it comes to SoFi. Hood right here, 48.89. PayPal, 68.18. A couple more pieces of coverage right here on this China deal. Let me switch back over to this, and then we will keep going into some more of these individual names.
Best just to wait and see what happens.
She made some comments. Megan just showed some of those comments coming from the Chinese government.
Right.
Also adding to that, they said that the rest of the world shouldn't appease the United States when it comes to these things too. Maybe signaling that they're worried about the rest of the world kind of going along with some measures and teaming up with the United States against them.
Absolutely.
This is going to be kind of fascinating.
Absolutely. I think China is seeing how many countries are going to the U.S., are responding to these tariffs by saying we do want to make a deal and offering different things. And China doesn't want to be the one left alone as much as they want to hold out. We've seen that over the last couple of months. You guys have talked already earlier about some of the easing that they're doing. It does become a question of what the pain threshold is in China versus in the U.S. if we started to see some economic impact show up in the data here. So China wants to hold out, but as they're seeing every other country in the world, as the administration puts it, come to Washington to try to negotiate, they have at least agreed to this meeting, even as they keep putting out these strong words about what they will or won't do once they get there.
All right. So again, the breaking news for those that are just joining, the reason the markets are up in the pre-market, even though we're getting some red candles here on the S&P, is China is meeting with Bessent, the vice premier of China in the Ministry of Finance, and Treasury Secretary Scott Bessent are meeting in Switzerland on May 9th. And so that is going to be very exciting for the overall markets. We have a pretty green pre-market. It's not blistering green. We're going to see if this holds up in the next 8 minutes. But those two events are happening over the weekend, which should be rather exciting for the overall potential of what is going to be happening on further negotiations for these trade deals. I'm really sorry, guys, about these bots. I mean, today it's just getting ridiculous. It's like there's a lot of them right here. So I am sorry about that. I really don't know how to do anything about that. I would hope YouTube can do something about it, but it's getting a little aggressive right here today. So hopefully we can try to resolve that. They're using the same coin though. Like they need to get a different coin if they're going to. XAI13ZZ is like old as last month's news. They need a new coin, but please do not click on it. And please do not buy the coin either. Okay, a couple more super chats, and then we got 7 minutes until the market opens. First of all, Cheeky YG, thank you for becoming a channel member. Appreciate it. Nick, thank you for the $10. Been here since 2022, and pounds are at 8. I appreciate you, Amit. Nick, thanks for being here. Nick, I also think you're in Grab, so hopefully we have something even remotely similar to Pouncer on Grab, and that can be another journey that we're on together. Craig, thank you for the €5 or £5. I'm getting better at that. Oscar earnings today up 17% pre-market. Okay, so this company also reported earnings. OSCR, this is a healthcare company. They're up 20% right now. I have not done a ton of due diligence on these guys. I do know that their growth is pretty phenomenal, and they are a company that really started hitting an inflection point in the growth 2 quarters ago. They had 2 million members. They have 2 million members. They had 300,000 people this quarter, and total revenue was about 3.05 billion versus 2.14 in 2024. So their growth rates also are starting to expand in a pretty meaningful way. Again, total members 2 million, and then EPS beat 92 cents versus 81 cents expected. So anyone in Oscar, you've done very well. And these healthcare names, Hims, Oscar, all of these guys starting to see a lot more momentum as well. Okay, we got 6 minutes until the market opens. SoFi, let's talk SoFi for a little bit. So outside of all of the what is perceived as bearish arguments I gave on SoFi last week, which in my opinion were not bearish at all because I still own the ticker, and if it goes to 20, I would be very happy because I would make a lot of money. My comments last week were more about the comparative nature about, hey, I don't think Robinhood is just a tool. I think it's also an ecosystem in response to someone saying that Robinhood is a toy and SoFi is an ecosystem. And that's what led me to look at their net deposits, their user growth, et cetera, and make that analysis. I think some people took it personally, but it's not bearish SoFi. And I tried to say that many times. I tried to say it's just an analysis of two companies that both can be ecosystems, not one being a toy, the other one being an ecosystem. Having said that, one thing that is undeniably bullish on SoFi, and like, I don't think anyone can deny that this is going to be bullish. And the reason I'm bringing it up today is because we have an FOMC meeting, is that rate cuts. We're going to have rate cuts, right? We eventually are going to have rate cuts. And I was looking at some of SoFi's numbers last night. I believe 2 elements of their business are going to experience like S curves of growth going into the end of Q3 if JPOW gives us at least 50 basis points. What are those 2 segments? I think it's pretty obvious. Student loan originations and then mortgages. Right now, people are buying houses, not like crazy, but we're seeing that people are buying like 300,000 houses a month, and we've got mortgage rates that's damn near 7%. If JPOW gives us at least 50 bips of cuts because Trump walks down the volatility, you get inflation with a great reading on CPI next week. Hopefully we come in at like 2.2. Right now we're at 2.4. JPOW is going to have no choice but to cut rates. And if he doesn't cut rates, it's going to be JPOW's recession. People are not going to be blaming Trump as much as they are currently blaming him right now. If we get those rate cuts, I don't see how SoFi doesn't get massive refinancing demand on student loans. We've got $1 trillion of student loans that has to be refinanced. Trump has made it very clear that you're not getting any more exceptions. You're not getting any more exemptions. Biden basically gave us 5 years of not having to pay student loans. Trump is not doing that at all. He's also not forgiving a lot of student loans. Every other month, Biden would forgive more student loans in the PLF, the public student loan forgiveness program. Trump hasn't really forgiven that many student loans. So I think if people are going to be paying as much as they're paying on student loans in terms of the interest, they're going to want a much lower interest rate. And as a result, SoFi's refinancing options are going to be very important. And then on mortgage rates, people are going to want to put their houses up for sale. People are going to want to buy houses. People who just bought houses at 7% might want to refinance at 5.5% or 6%. That also would be something that is bullish for SoFi. Now, having said that, I don't know if that's going to increase the multiple on the stock, because at the end of the day, that's a lending part of the business. That's not really a technology part of the business. So I have no idea if the multiple gets increased because of the origination demand, but I think it's undeniable that there is going to be pretty serious origination demand going into the end of hopefully Q3 if we get at least 50 bips of cuts. I think we need at least 50. 25 would not be enough. 75 would be amazing. I don't know if JPOW is going to give us 50, but 50 would be what creates, I think, an avalanche of demand on SoFi as well. So, yeah, I mean, look, I'm still bullish on the name. I think it's undervalued. Obviously, I think Hood is a better bet in terms of being an overall financial ecosystem over the next decade, but that does not deny the fact that SoFi can absolutely have massive levels of demand going into Q3. But it's all contingent on if JPOW is going to cut the rates. And based on the Fed probabilities, we have a 4% chance of getting a rate cut today. That's not going to happen. And now we have in June a 28.6%. This number was 65% last week. And then we got that non-farm payroll data that showed that we might not be having as many layoffs as people thought. And now it might not be as likely that we get a rate cut in June. You know, I think if we don't get a rate cut in June, it's going to be really sad because I think inflation is coming down, but it's going to be up to JPOW today to give us an inkling of, hey, is he actually bullish or not going into the end of Q2? Because if we don't get a cut before Jackson Hole, which is this conference he does at the end of every August, then I think we're obviously going to have some issues. So hoping to see what happens with JPOW. We got the market open in 1 minute. I'll be live at 2:20 p.m. Eastern covering JPOW, and we will see if he gives us anything that's bullish, hawkish, or dovish, and we'll be analyzing it all throughout the day. Again, guys, sorry for the bots. YouTube, they're really ramping up today. Hopefully they die out a little bit. Thank you to the mods for getting rid of some of them, but yeah, they're just being a little bit annoying today. VVV, thank you for the $100 super chat. Appreciate you, brother. Didn't say anything, but I appreciate the $100. Means the world, VVV. Thank you for being here, and thank you for the $100. And whoever you are, Triple V, I appreciate it, and hopefully you are enjoying the show. Z-Soul, thank you for becoming a new member as well. Appreciate you, brother. Thank you for being part of the channel. All right, here we go, folks. We got 5 seconds. Let's see what we've got in store for this market open. May 7th, 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. Robinhood, 48.92. That's up 0.69% on the day. Palantir, 107.97. That one goes down about 1% right here. That was down about 8%. We'll talk more about Palantir in a bit, but that one is continuing some of its downward trajectory from what we had yesterday. NVIDIA was up yesterday after that China news. NVIDIA 112.79. That's down about 0.7%. So NVIDIA continuing to go red even after that China news came out yesterday, which was bullish for the broader markets, but right now not the biggest for NVIDIA. Grab was breaking $5 in the pre-markets. That $5 resistance is pretty exciting, but it's pretty aggressive, that $5 resistance. But 492 right here on Grab is going to take some momentum to break over it. Hopefully we get back there, up 1.86% on the day. Again, Hood right here, 49.12, trying to get back to 50. Amazon, 185 on the day. Why'd you guys say it was a Temu bell? Did the mic do what it did back in December where like it drowned out the bell? I'm gonna have to listen back to it and see if it did that. If it did, it hasn't done that in 7 months. I hope that didn't happen, but that don't encourage him on the bell. Oh my gosh. Some of you guys were so happy when the mic was like drowning out the bell, and then I fixed it, and then everyone got so upset, but it did do that? Okay. All right. Well, we'll have to fix that later. All right. Robinhood right here, 49.41. Palantir, 107.80. Meta, 589.11. That's up 0.11% right here. NVIDIA, 113.26, getting a little bit more of a green candle right there, even though we are red on the day. There you go. That's that little bit of green that we're getting. GameStop right there, 26.17. Intel's at 19.99. XYZ, 47.84. That was down 20% 2 days ago. AMD is actually up 3%. Not too bad. AMD from 97 to 102. That one getting a little bit more of its momentum. In terms of the semis today, NVIDIA's down, AMD's up, Micron's down, Dell is down, Broadcom's down. Where's SMCI? SMCI down 7%. SMCI down 7%. That one's getting hit. That one is getting hit. All right, so SMCI, even with a beat on EPS, not enough to hold up right here. NBIS, Nebis Group, 27.71. Jeff Bezos is investing with Nebis in another company around AI LLM training and fine tuning of models. So that company right there getting some momentum based on this investment, up 10.4% on the day for Nebis Group. In terms of the banks, we have KRE, that's up. The regional banks, TFC's up. Wells Fargo, JP Morgan, SoFi up a little bit here today, 0.2%. Citigroup and Bank of America as well, $40.94. That's up about 0.294%. Crypto, where is Bitcoin? We are at 96,945. Bitcoin got to almost 98,000 yesterday. So it looks like that China deal was also bullish for Bitcoin. Wow, MicroStrategy making its way almost back to 400, dude. Holy crap. MicroStrategy, been a long time since we got close to 400, 391 on MSTR. Coinbase right here, 199. Where is Pouncer? Pouncer goes green. Pouncer goes green. 109.40. Pouncer goes green. And then HIMS trying to go green as well. HIMS trying to make its way back to 50. HIMS trying to make its way back to 50. Disney had earnings today. They crushed. They're up 10%. That usually doesn't happen. So shout out to Disney. Uber had earnings today. They crushed as well, beat EPS by 60%, but they're down 4% on the day, a little bit lower on the guidance. And then Oscar Health had earnings today. They are up 21%. Unity also had earnings today. They beat on the top and the bottom. Unity right here, basically up 1% on the day. Where's Roblox? This company had a great earnings last week. We got a bunch of earnings today after the bell that are going to be important. Roblox right here, 71.29. That's up a little bit as well today. Starbucks right here, 82.57. Let's look at some of the earnings from what we had yesterday. Roku, Reddit's down about 1%. Roku's down about 1%. Airbnb basically flat. Atlassian also flat. Riot's up about 1.7%. And then NVIDIA right here, 113.01. That one also basically flat on the day. Where is Netflix, which took a hit after those Trump tariffs? Yeah, look, Netflix basically back at all-time highs. Netflix not really affecting it Netflix not being affected as aggressively by the Trump tariffs. Grab right here, 485. Grab really not being able to hold on to that momentum. I think the street's really waiting for a deal. I think the street's waiting for a deal to make this happen. Now, Grab is going to have to pay a lot of money to make this deal happen. So that is the one bad thing about the acquisition. I just think that the acquisition itself outweighs the money they're going to be paying. Like, it's better they put the $7 billion into Goto versus have it on their balance sheet. But it looks like the street's going to be waiting for confirmation. If you're just joining, the news was today by Reuters that Grab is in serious talks to acquire Goto by Q2, and they've started consulting a lot of different advisors on how to get this deal done. Novo's down a lot. Yeah, Novo actually missed on earnings. So this one, it was already down 50% going into the print. Novo Nordisk right here continued to seize. Oh, that's actually up a little bit, 3%. I mean, it is down for the year, but it's up right now. Yeah, it's up about 3%. I mean, people were expecting a really big pump given how much it was sold off going into this print, but you're seeing about a 3% move here. So nothing too crazy on earnings that were rather lackluster from what the market thought. Okay, CrowdStrike's down 5%, not because they had earnings or because they missed guidance, but they're cutting 5% of their workforce, 500 people. They're cutting 5% of their workforce. I don't really know if this is super bearish because I don't know if it's emblematic of overall layoffs in the tech sector. We have seen some more serious layoffs in regards to Intel and UPS. CrowdStrike's a tech company. I mean, they just might want to be increasing their margins. Potentially might be saying, hey, we just don't need as many people as we thought we needed before. This is a company that trades at a pretty expensive PE. I think they're trading at like 400 price to earnings. I know Palantir is expensive as well, but CrowdStrike's the second highest expensive software name. So they might just be doing something to better up their balance sheet. But you can't imagine the street saying, hey, maybe their earnings suck. They want to lay off some people before they report a crappy earnings. And the layoff may be helping to lessen the blow. Palantir right here back at 110. And that's why CrowdStrike could be down 5% right now. So yeah, I think that's more of a argument about what their earnings are going to look like. But I don't think you saw CrowdStrike simply because they're laying off 5% of their people. SMCI right here, down 6%. So this stock, which I believe is an energy play, ESOE, this one is up 20% here right now. It is a small cap, if I'm not wrong. And that is why they had a good earnings, and that one's pumping right here. It's not available on Legend. Is it sold on the OTC markets? Yeah, it's on OTC markets. So that one, not something that easily people can publicly trade. But that stock is up 20% off of good earnings as well. Lisa Su on CNBC. Okay, let's switch to that. Let's see what Lisa Su has to say. Again, really good earnings for Lisa Su. Guidance on data center revenues was just a bit lighter than expected, and that's why the street is giving them some pain right here. Pouncer right here at 110. Again, Disney 10%. Did not expect Disney to have a 10% move. They usually don't move like that, but you got 10% moving right here to the upside on Disney. One sec. Let me share this again, and then you guys should be able to hear it. Here we go.
In 2025, and that is really on the strength of the overall portfolio that we have.
Yeah, a lot of the bullish notes today take note of new chips, right? That will be debuting relatively soon, going to impact favorably the second half. And then this notion, Lisa, I'm not sure how comfortable you are addressing it, of Intel as a shared donor.
Well, let me take both aspects of it. First, let's start with what we're doing. We are really about having very strong product roadmaps out there. We've always said that for all of the years that we've been talking. It's about having a great product portfolio that really plays to what customers need right now. So we see excitement in our data center portfolio. Today, our EPYC processors, our server CPUs are all over. Every major cloud provider is using our server CPUs. We have tremendous opportunities and growth in the enterprise market, where you see many of the Forbes 2000 companies also selecting AMD. And I think that's because we've shown them year over year that we continue to give them significant total cost of ownership to make it more efficient for them to get their job done. We're also very excited about the AI opportunity. I think, AI, I heard you guys talking about it as I was coming on. I absolutely believe we're still in the very early innings of AI when we think about the opportunity. And yes, there are some, puts and takes and bumps in the road, but overall, we're still at the place where, enterprises are just beginning to feel what AI can do for them. And then also the PC market is a market that has done extremely well for us, and is a place where, again, people are upgrading their PCs. They want to upgrade to the best technology that has, great performance as well as great efficiency. And, that's what we have in our roadmap.
Lisa, you can't get away from the questions about tariffs, I'm afraid. I know on the call there were quite a few, and I'm going to go there as well because it is a key part here. I mean, do you have any expectations as to whether there will be sectoral tariffs or what they might be? And I also would be interested to know whether you expect there was some pull forward in terms of demand as a result of fear of potential tariffs.
Sure, David. So look, I think we're all watching the regulatory environment, very, very carefully. As it relates to sectoral tariffs, we're in active conversations with the administration as they're thinking about both the short-term as well as the long-term policy. The long-term policy arc is we want more U.S. manufacturing. We want more manufacturing here in the United States, and we are actively moving a bunch of our manufacturing here, but we realize it's going to take some time, and I think that's the balance that has to come in play.
Okay, we'll go back to Lisa Su in a second, folks. We got a green market. Look at Palantir 111. That's up 2%. SoFi, I believe, is catching a bid right here. SoFi 1298 up 2% as well. I mean, SoFi getting some momentum right here, trying to get back to the 13s, which it looks like it has the chance to. Let me check the resistance on SoFi real quick on 13, but it's showing some strength. 1299. It's basically there. You got about a couple pennies separating it, and then HIM's trying to get back to the 50s. HIM right here. Yeah, there you go. You're already at 50 on HIM. So we are getting some green momentum. People might be buying before JPOW speaks. In terms of SoFi, $13 has 4,000 shares. It's done. I think we should already be there. Yeah, at 4,000 shares. There you go. 13 on SoFi. There you go. So SoFi getting a bid. Tesla getting a little bit of a bid. That's up about 0.5%. Robinhood, 49.16, trying to match HIM's and get to 50. Palantir back to 111. Look, those earnings were really good on Palantir. They were not NVIDIA level earnings. A lot of people felt the stock should be down 20, 35% based on those numbers, just not living up to the valuation it's trading at. The fact that Palantir's potentially, we got to wait a couple weeks to see if this is actually happening, but potentially normalizing the 100 to 120 range, which I think we've definitely normalized 70 to 100. We have not normalized at all 100 to 120. If we can normalize that, that's the floor. I mean, dude, I don't think anyone would be upset with saying triple digits is the floor on Palantir. So 111.31, again, we got to see. This has only been a couple of weeks of maintaining some of these levels. So we need at least another month or two to see if we can hold 100, but not bad on Palantir. 111 right here, up 2%. Grab is down a little bit. Roblox is up about 1%. SMCI was down 7%. Now it's only down 4%. So that one getting a little bit of recovery. And the broader S&P right here is up about 0.35. In terms of the Mag 7, They are all green except Apple. Apple continues to be the Mag 7 that doesn't get any love. Does not get any love right here. Apple 198, that's down another 0.5%. Amazon is green, up 2%. Tessie's up almost 1%. Nvidia also down 0.5%, but Nvidia looks like it wants to go green. Google is up about 0.5%. Meta's up 0.5%, and then Microsoft holding that 435 level that it got after earnings. And it really hasn't given up that 10% bump that it had a couple of, or not even a couple of weeks ago, last week when they had their earnings. So seeing some decent momentum. Where is Bitcoin? Bitcoin get back to 97 would be nice. Bitcoin back to 97, 97.1. 97.1. Also, we didn't talk a lot about India, Pakistan, but I mean, I hope a war is not breaking out. India retaliated yesterday. Pakistan retaliated against India's retaliation. There's a lot of claims being thrown out there about casualties, etc. I think we're going to get more details over the coming hours. That could escalate, though. And that caused gold to go up 3.5% yesterday after hours. Gold's down 1% right now. Why is gold down? Because then Besant said he's going to Switzerland to meet with the Chinese. And so although people bought gold as a hedge against the geopolitical instability of India and Pakistan, they bought the market once Besant said we're probably going to get a framework to start negotiating with China. And so you got a lot of stuff moving back and forth. That could also be affecting Apple as well. Obviously, Apple shifting a lot of their manufacturing to India. And if India is going to be riddled in an entire war over the coming months, then obviously that's not going to be the best for Apple stock right here. Apple right here down 0.15%. You got the S&P up about 0.35, currently right now at 560.91. All right, let's get back to Lisa Su right here.
With sectoral tariffs, and we'll have to see how that comes forward. Now, to your question about the strength in our business relative to tariff pull forwards, I believe that, again, every customer and every industry is looking at this slightly differently. From our standpoint, our strength is actually very much focused on the strength of our product portfolio. I think the relative tariff impact was small, whereas the relative opportunity for us has been just, end user demand for our products. But we're going to continue to watch this very carefully. And the beauty of the business, David, is I think we've learned to become very agile through all of the things that have happened in the semiconductor supply chain. And we're going to continue to watch, all of these trends very carefully and make sure that we react appropriately going forward.
Yeah, you mentioned being agile as well on the call and said you have a good overall inventory position. I guess my follow-up would be, what does it mean to be very agile? What does that actually mean?
It means we have a great balance sheet. It means that we have great customer relationships. I think we plan for success. So we make sure that we are planning for a market that is, robust to our products, but we will certainly adjust as needed if we see the macro weakening. Now, I have to say, for customer ordering patterns today, we're already, let's call it a month into the second quarter. The month of April was actually quite robust. So it gives us confidence that, people aren't making very short-term decisions right now. I think they're all wanting to ensure that we watch the environment. But recognize that, we've been through many of these types of situations before, and we're able to adjust the supply chains and our inventory levels as needed as we see how the macro does over the next couple of quarters.
And that might have been the reason that AMD lowered their data center revenue guidance. To be honest, they could just be sandbagging and using tariffs as like a scapegoat right here to be able to really beat on data center revenues into Q2. But on the call when they said that, the stock went from like 105 to 97. So obviously the street didn't like it, but it could be one of those things that's not really a big issue going into the end of the second quarter. Take a look at bond yields, dude. They're coming down. Look at the 10-year back below 4.3. You got stocks that are up, yields that are down. The only thing that can mess this up later today is a guy who goes by the name of Jerome. And as long as he doesn't mess it up, I mean, we could have a pretty damn bullish day if we keep seeing stocks gaining momentum along with yields go down. That means that people are effectively buying both right here, which is something that we want to see. Now, Oscar, this thing absolutely mooning right here, 25%. I don't know what the short float is on this one. Let me check if there's any potential for a squeeze right here. But this one, again, great quarter. They beat heavy on EPS. Wow, short float is 10% on Oscar. You got a lot of these stocks that are doing pretty damn well, but they have relatively high short floats, not as high as Hims. Hims is 3x Oscar short float, but still, that could be enough to get some of the shorts to get scared. Where is Hims right here? Hims 49.91, basically toying with 50. SoFi back below 13, 12.97, trying to maintain some of those levels. And then Palantir right here, 110.54. That's up about 1.5% as well. CEP, this is Jack Mallers' Bitcoin company. This one is up 15%. I think there was some news on this yesterday around, someone confirm if this is true or not. I don't know if this is true, but I think it's true. Did you guys know that Cantor Fitzgerald's equity portfolio, the thing that Howard Lutnick runs, 32% of it is in MicroStrategy? Did anyone know that? I'm still trying to confirm if that's the case, but that's what I saw yesterday. That 39.2% of their equity holdings in Cantor Fitzgerald is freaking MicroStrategy. And then you have NVIDIA, Tesla, AMD, and Rumble. And then you have IBIT. So you have a lot of Bitcoin. And then you have a bunch of bonds. I mean, look, if you're bullish Bitcoin and one of the most powerful people on the planet at this moment, Howard Lutnick, is in the White House and his firm's AUM, 39% of it is in freaking MSTR. I just feel like you've got someone on your side who's going to make sure that this thing doesn't explode. I mean, talk about degen, bro. 40% of Cantor Fitzgerald. Like, I couldn't believe this. I legitimately couldn't believe this yesterday, but apparently it's true. And again, his sons are chair and vice chair of Cantor Fitzgerald. The Cantor Fitzgerald is sponsoring CEP, which is up 15%. This is like a Bitcoin holding company. They're like it's kind of like a SPAC, and they're a sponsor for the SPAC. They get a management fee for bringing it to the public markets, and it's all rooted in Bitcoin. So, I mean, Bitcoin itself, with all the volatility, very close to 100,000. It just seems like this has been a natural hedge against a lot of the equity markets feeling weakness, and it looks like Howard Lutnick is hopefully going to maintain Bitcoin and its momentum right here. So that's incredible, dude. That's incredible. 40% in freaking MicroStrategy. I could not believe it, but that's what we got for Cantor Fitzgerald. Marvell is down 10%. I think I know why. I believe they delayed their investor day, if I'm not wrong. And as a result of that, that is what's causing some of this pain. So they were supposed to have an investor day either yesterday or a couple of days ago, and I believe they delayed it. Correct me if I'm wrong. And that is also what got the street upset. On top of that, you had a downgrade right here. So Cantor Fitzgerald downgraded them to 60 from 125. They say, while we believe the significant decline in Marvel shares since their January peak reflects the loss of Trainium Gen 3 at Amazon, we do not think it yet reflects the potential loss of Microsoft's Gen 3 chip, which our industry checks indicates is likely. We had hoped for new announcements on its wins at the upcoming Investor Day, but with management delaying the event, we suspect there will be little positive news to share. So you have some downgrades based on the delaying of the event and also the potential loss of Microsoft as a partner now that they lost Amazon as well. Are we going red right here? S&P is going a little red. We got some red candles. AMD it was up 3%. Now it's up 1.3. Where's Rocket Lab? Rocket Lab is down 22.25. SoFi is also just below 13. Meta's at 588. Palantir's at 110. NVIDIA's at 112. Archer's at 858. Verizon's at 44. Block's at 47. Again, it looks like some of these names are holding their green, even if they're not going red, but they're definitely giving up the majority of the green they had during the day. Q's very close to going red right here. Where's Apple? Apple 197. That's a new low for the past 10 days right here on Apple, down about 0.35%. Overall markets are green though, even though some of these names are getting some of these red candles. Where's Tessie? Tessie was up about 0.5%. Tesla still green, but it's basically flat, up 0.2% now. Could you still look at Duolingo? So Duolingo is an expensive stock. There's no way about it, but it's a growth stock. It is an absolute growth stock. They grew daily active users by 60%. Revenue's up 45%. I think they're very close to profitability, if not slightly profitable. I mean, it's kind of a Peter Lynch play. If you believe that more people will be learning new languages, and if you've used the product yourself, their user engagement is unbelievable. Their marketing is absolutely incredible. The founder, he sold his business to Google. He's the founder of, if I'm not wrong, DoubleClick, and which is now AdSense on Google. And he sold it to them back in 2008, 2009. And then he was bored and started Duolingo. So I mean, you got a founder-led company that's done incredibly well. I just think the multiple is pretty aggressive on it right now, so I wouldn't buy it. But if you're in this for the next decade, the growth is showing that they can really sustain the premium that the stock has right here. NVIDIA 112.94. That one is slightly red currently right now. Oh, CAPTCHA. It was called CAPTCHA. So CAPTCHA is that thing where when you get onto a website, you need to like double click on something to prove that you're a human being. And it's like, I believe it's called a CAPTCHA when you like prove to the website you're not a robot. So that thing he created, and I think he sold it for a couple $1 billion, something like that. Or maybe it was a couple $100 million. But regardless, you know, you sell a startup to Google, and then you start another multi-billion-dollar company. It's pretty damn impressive. And that is the story of the Duolingo founder. Also, Duolingo went viral when he gave a TED Talk. And that TED Talk, like this is when TED Talks could go viral. This like TED Talks now are kind of saturated, but back in 2010, you know, you get like 10 new TED Talks a year, right? And he was one of the 10 TED Talks. And the thing went crazy viral about what it means to like embrace a new culture by learning a new language. And they had 1 million people sign up for Duolingo in like 5 days. So really organic marketing the company has been at the forefront at. And, you know, that's why the stock has had some momentum. Robinhood right here, 48.78, losing a lot of its green as well. Markets might be selling off in anticipation of JPOW. Tesla right here, 275.61. That is also losing a ton of its momentum. Where is Disney? Disney is still up 10%. Disney is still up 10% here right now. Amit, can you look at this? The Fed bought $35 billion worth of 10-year bonds. Maybe that's the reason it's down. I have no idea what it means to the market. Okay, so I did see that yesterday, that the Fed did buy back some bonds. Now, they're going to say it's not necessarily quantitative easing, but it basically is, to an extent, quantitative easing. So, like, does this mean quantitative easing has begun? I don't think that's necessarily the case. The Fed, in various different instances, for whatever reason they use to justify it from a logistical perspective, will buy treasuries and sell treasuries on the balance sheet to be able to maintain what they say is liquidity and a host of other things they talk about. That could be why the 10-year is taking a little bit of a dip right here, even though stocks are green. But I'm not exactly sure why they bought $35 billion worth of 10 years yesterday. But that is also what I saw yesterday. Maybe Kris can explain it to us. Let's send the StreamYard to Kris and get his perspective on this. But I did see that last night. I also thought it was a bit weird. I didn't go too deep into it because I was covering AMD earnings. So I kind of just started focusing on the earnings we had yesterday. But yeah, I mean, look, I don't think that's bearish. And that could also be a reason Bitcoin's getting some love. Because again, Bitcoin is a proxy on M2 more than anything, money supply. And if the Fed's buying up more bonds, even though they say they're not quantitative easing, you would imagine that Bitcoin says, all right, there's more money in the system. That means more of fiat currencies are going to be debased. That means Bitcoin has more of a use case, and that's why Bitcoin goes the opposite of those levels. Someone says they're not doing QE, they're just doing less QT. As their bond holdings mature, they reinvest most of them to avoid having the balance sheet go down quickly. Their balance sheet isn't increasing. Okay, so that's a fair point. I think that's probably what Kris is going to talk about as well. So I guess that's the argument they make about why we're not doing QE. We're just slowing off the pace of selling bonds on our balance sheet, which is a slower pace of essentially quantitative tightening. In a way, that is easing, even if it's not quantitatively meaningfully buying up assets on the balance sheet. But if you're not selling as many, then, you know, that's not the worst thing in the world for equity markets, and obviously not the worst thing in the world for the bond markets. Amazon right here, 187.34. SoFi, 12.92, holding up that 1% move. Palantir still holding 111. Still holding 111. By the way, speaking of Palantir, today is the 1-year anniversary of beating Carp. So May 7th, 2024, this happened. It was the first time we met Carp. I said, hey, do you like my hair? And he said, yes, but we need to do a little something to it first. So a year ago, things have changed. The stock was $21 today. A year ago, the stock was actually down 20% from $25 on the earnings, kind of similar to what we're seeing today. And shout out to Eliano, who is the guy who started the Palantir merch store and invited me to the event to make it happen. So 1-year anniversary of getting this thing done. Arnie as well posted a great picture. Arnie was with me. Shout out to Arnie, one of my best friends in this game. And this was his picture with Carp back in May of last year. Time flies. Time flies. We also got to interview Sham at the SCSP conference there. So it's just been a crazy journey, dude. For the past year, stock is 5x. Momentum has been incredibly aggressive for the community and for the company. And so really cool to see this happen over the past year. 111.59 on Palantir, up 2.5%. Robinhood back to 49. SoFi trying to get back to 13. NVIDIA 113. And the S&P 500 basically holding up 0.5% on the day. Oh, Palantir. I don't know if anyone saw this yesterday. Palantir is working with XAI. So XAI and TWG, Karp was on CNBC yesterday, and he talked about it as well. They are officially partnering with Palantir. So TWG is going to be working with regional banks to basically re-architect how financial service providers can successfully adopt AI and scale technology. XAI is going to be providing all the compute to be able to make this happen. And then Palantir is going to be providing the software infrastructure. TWG, as the global investment company, is going to be working with the bank. So you got all three of these guys working together. Karp was on CNBC yesterday talking about it and basically said, hey, we deliver outcomes, we deliver results. And it looks like we're going to continue to deliver outcomes and results, in this case, for financial services providers, which is really good because Palantir doesn't make a lot of deals with the banks or the fintech companies of the world. And if they could start getting into that area, I would be very happy for them because, I think there's just a massive opportunity in financial services for Palantir to capture, but they focus more on healthcare. They focus more on energy. They focus more on logistics. It looks like financial services is the next obvious vertical to go after as well. Cool. Have you bought HIMS? No, I have not bought HIMS. I'm very, very impressed with the community though. I think it's a gem of the community and I think it's doing very well. I might sell some puts on this thing. I mean, the put premiums are crazy, so I will let you guys know if I do anything. But as of now, no position in HIMS. Obviously, Oscar, a big name of the day. That one is also up 29%, really getting some momentum right here. And they had a good earnings. Stock sold 10% short, so that could also be creating a bit of a squeeze on Oscar here right now. Can SoFi and Palantir intersect? It's an interesting idea. I don't think it's crazy to say Galileo and AIP and Foundry could work together. Would it ever happen? I don't know. I think it would be pretty damn cool if SoFi worked with Palantir. I think there's definitely a ability for them to like meaningfully architect what it would look like to create a B2B payments API platform in the age of AI. But I don't know if that would happen. It seems like there's synergies though, is what I'm trying to say. And if that did happen, I think it would be, something very exciting for both communities as well. Elaine says financial services won't like what AIP uncovers. Yeah, I mean, AIP or Foundry was in JP Morgan back in 2018. And then JP Morgan kicked them out. Now, I don't think it was because Foundry was showing too much data that shouldn't have been shown. I think it's because the product just didn't have product market fit at the time. Coca-Cola, Home Depot, JP Morgan. There's a good article from like 7 years ago showing how Palantir lost a lot of their commercial clients because the product just sucked. In 2018, it just sucked. Like they just didn't know how to work with these big enterprises in a meaningful way because they were so used to working with the government. They got to all these big name clients and they kind of just sucked. And it took them a good 4 or 5 years to figure out how do they meaningfully scale in the enterprise. But ever since they stopped working with JP Morgan, they really haven't visited financial services. And so I think it would be a great vertical for them to get back into. Palantir right here, 111.69. HIMS as well, up 3% currently right now. I don't see any news about Trump meeting with China. So Trump is not meeting with China. Scott Bessent is meeting with China, who is the Treasury Secretary. He's meeting with them in Switzerland this weekend from May 9th to May 12th. So it is going to be a big meeting. I think a lot of us have expectations that meeting hopefully leads to the start of real negotiations. China, based on their tweets, the Chinese embassy, they feel very, amicable to beginning conversations. And hopefully, that creates more momentum for eventually getting a trade deal done. Let's get a little bit more coverage on some of the earnings we have today, and then we will keep going from there. And we'll get some more China updates as well.
For a big interview this afternoon.
Gainer in the Dow and S&P beating on the top and bottom lines, raising guidance and announcing plans for a new park and resort in Abu Dhabi. We've got much more on the expansion plan. Disney CFO Hugh Johnston will join us to break down the latest earnings and outlook this hour. Uber missing revenue expectations despite trips being up 18% from last year. CEO Dara Khosrowshahi telling CNBC earlier this morning, growth remains, quote, very healthy. And then Novo Nordisk gaining despite weaker numbers, sales coming in lower than expected, the company cutting forecasts. But that said, executives do expect sales of its blockbuster weight loss drug, Wegovy, to improve in the second half. The stock has also been under a lot of pressure into these results.
So Novo, decent earnings, not crazy. They're up 3%. Uber, I thought great earnings. They're down about 3%. And then Disney, Abu Dhabi. You got a park that is starting to get a lot more momentum in Abu Dhabi. That is why the stock is up 10% right here. It's not on Disney Plus. It's not on any of their movies. It's really about their parks business that's seeming to get not only more momentum, but more momentum in an age of all this tariff volatility, also diversifying outside of the United States. So that's why the street might be excited. But Disney usually does not see this big of an aggressive move, 10%, but it's seeing it right here. Disney right now up about 9.63%. Christopher Patel, good morning. How are you?
Dude, let me tell you, all day yesterday, I was getting so annoyed on Twitter, seeing some of these people posting the latest treasury auctions and trying to say oh, the Fed is doing stealth QE and all this other nonsense. I was like, stop, please stop, because you're so wrong. It's beyond maddening to keep seeing it. And it's shocking, but whatever. And the funny thing is, I hope that the Fed eventually does QE, but I actually want to make sure that, they're doing it. It's not just someone saying they're doing it and then causing the markets to move in that direction. So yeah.
What is the Fed doing? And is it bullish or bearish?
All right. So but before we do that, let me just show you a chart real quick, because I think this will help explain how the treasury markets actually work. All right. So this right here, this chart shows the total amount of assets that the Federal Reserve owns. Okay. The Federal Reserve's job is basically whenever there is a recession or, unemployment and anything really bad happens, the Fed can act as a buyer of last resort for government debt. So if you look at in 2026, the balance sheet on the Fed wasn't that high. It was maybe less than $1 trillion. Okay. So if you look at the total assets, it was $800 billion in assets. So the Federal Reserve, the way that it does things, it prints money. All right. So when things get really hairy, the Fed can come in and just buy up all the debt that's out there that the government is issuing. So the government can issue that debt at a reasonable price, right? And then there's actually a buyer there. So right now, if the federal government says, hey, listen, we're having an economic crisis like we did in the great financial crisis, we need to authorize the purchase of a whole bunch of mortgage-backed securities to, basically lower the price of those loans. What do we do? So the federal government goes out there and spends that money. The Fed prints the money and buys up the bonds that the government issues. So the government, whenever we look at the debt and we're like, oh, we're 35 trillion in debt. Well, about 8 trillion of it, or about 9 trillion when things got really inflated, is actually owned by the Federal Reserve. Which is pretty much us, right? So let's start over here in 2008. 2008, there was less than $1 billion. Great financial crisis happened. So the Fed goes in, lends all this, the federal government goes in, lends all this money through TARP and everything else. And at the same time, they end up issuing a ton of, they end up buying a lot of treasuries. And we go into something called ZIRP, right? Zero interest rate policy. So when the federal government issues debt in the short term, it was yielding basically nothing. The long end was yielding something, and all of that debt was bought by the Fed. And when the Fed buys it, it lowers the cost of borrowing, because now the Fed being the most secure, the U.S. Treasury being the most secure type of debt, if you lower the yield on that, that means that all the other bonds that are out there are going to kind of come down as well. So when the Fed came in, what they did was they started doing quantitative easing. Now, what does that mean? This is what quantitative easing looks like. When the balance sheet of the Federal Reserve starts to climb higher and higher, that means the Fed is actually coming in and buying assets, right? Whether they be mortgage-backed securities or treasuries, or believe it or not, during COVID, they actually even bought, I think, some corporate debt too, which is oh my God, but whatever. I digress.
And that's how you know
The
things
point-
were really bad at the time.
Yeah. So if you can see here, the assets, we had really low inflation because, we were just coming out of the great financial crisis. 2010 to almost 2014, the Fed was constantly stimulating. And then in around 2015, the Fed started to kind of taper a little bit where, there was debt that was maturing, and instead of buying new securities to keep that level, they would just let it roll off. So you can see here that it was slightly rolling off. And as inflation started to pick up during the Trump administration's first term, the Fed started to raise interest rates, right? And at the same time, they were letting the assets on the balance sheet kind of roll off. So you can see that move down right here when that happened, right? This was, of course, followed up by COVID. And when COVID happened, the Fed came in and said, look, the US Treasury, we know you need to go out there and spend. You need to lend this money to consumers. So they go out there and spend. You need to lend money to businesses through PPP and all this other stuff. Don't worry about the debt. We'll buy up all the debt we can. And so what ended up happening is all the debt that was being issued by the federal government was all being bought up by the Fed. So a lot of people will ask, like, oh, how did I get a 2.75% mortgage? Well, the reason why is because the Fed was buying up all the mortgage-backed securities that the lenders were literally just pumping out. The lenders would pump out, people would refinance, and basically the Fed would come in and they would buy up all of those mortgage-backed securities. And you can see here, in 2022, when inflation started to get kind of high, the Fed said, look, we need to start kind of dialing back this liquidity. We need to take liquidity out of the markets. So what did they do? They started to let the mortgage-backed securities that they have, they roll off. And also the treasuries that they have a roll off. But they do it in a controlled manner, right? It's not like everything is going to be coming due right away. So what they would do is as the debt would come down, like let's say $100 billion that month was maturing, right? They don't want to roll off $100 billion in 1 month and basically spike yields, right? Because if you do that, then automatically the price of treasuries would skyrocket. So instead, what they would do is they would take like 25 billion, and basically of that 100, they would let the 100 expire, but they would buy 75. Right? You're only letting 25 roll off.
Well, which is not quantitative easing, but it's a slower pace of tightening.
Right, exactly. So what happened was during the last few quarters, the Fed said, look, we're getting to the point where we are already cutting rates, which is good, but we want to actually support the bond market. We don't want to be competitors out there. To the markets. So what they're doing, instead of letting 25 billion roll off, they're only letting 5 billion roll off. So you can see here that curve in treasuries is going, it was sharp going down, and it's kind of starting to like flatten out a little bit, right? So this is where people are like looking at this and saying, well, like, why is the Fed buying treasuries? Well, the reason why they're buying treasuries is because there were a lot of treasuries that were maturing, right? And they're only allowed to let 5 billion of it roll off. So all the excess that they have, they would just buy, right? And so that's what's
only the 5 billion. Is that a regulatory? Like that's
no. They're just doing it like as a way to control yields.
Okay.
Right. Because the thing is, like, if you let too many bonds like mature and you don't buy them like in the market, what ends up happening now is that now you need investors to pick up that demand. And investors, especially when you're doing it through auction, they're going to demand higher and higher yields, right? So if the Fed says, look, we're going to be still purchasing, and we're going to purchase like $20-30 billion, the other investors are not going to say, I want a 5.5%, 30-year. I want I want something like I could live with something lower. So as the Fed is rolling this down,
by maturing, you mean paying out the money to the bondholder, essentially.
Correct. Okay. So because remember, with bonds, most banks, everything else, they just let things roll into the next thing. So if you're looking at a balance sheet of a company, right? Like look at Palantir right now. They have 5 billion in cash, it's all in short-term treasuries, about maybe 2 years, 3 years, because they usually like to be more liquid. They don't, like, a lot of companies won't hold long-term treasuries. So what happens is, as Palantir is generating more cash flow, they're buying more treasuries, and those treasuries are giving them a nice yield. Now, as yields come down, those treasuries are going to yield less, right? So that's what's basically going to happen. But let's say on the opposite end, if inflation started to pick up, Palantir could technically take the debt that they bought a year ago that's maturing today, recycle that into higher earning yield, and basically get more money from it. So it's all about controlling that yield. That's what this whole thing is all about. So if, let's say, we get into a point where inflation starts to really die down, the Fed can say, we're going to completely stop letting things roll off. We're just going to let things stay on longer. So that's basically the crux of it. The challenge when it comes to understanding this is that it gets kind of complicated when you try to figure out, okay, how is the Fed what kind of maturity is the Fed going to buy? Is it going to buy a lot of short-term stuff? Is it going to buy medium-term stuff? Is it going to buy long-term stuff? And it all kind of depends on how the Fed wants to kind of control the yield on the stuff that's out there.
So what do you think Jay Powell does today? We all know he's not going to cut, but how does he frame the conversation about rates, in your opinion?
I mean, he's got to just basically, I think he's just going to say we're going to have to wait for more data, because the data that's been coming out recently has been, it hasn't been negative. It's actually been kind of okay. So I think there are some key data points that are coming out likely in the next 60 to 90 days that are likely to be more bearish for the economy. And if that's the case, then it's more likely that we get more rate cuts this year, and then even more next year. So it all depends. Like if we go into a recession, then the Fed will have to step off the sidelines and start getting in there and basically controlling things. And the way that they're going to do it is by lowering interest rates at the front end. And what that'll do is, a lot of people who are right now getting a nice yield on the 2-year treasury, they may move out with their debt. So they may buy 10 years. And the people who are holding 10 years may say, look, I see longer term interest rates are going to come down, so I'm going to buy the 20 and 30-year maturity debt. So that's basically the move on all of this. So.
What do you think about SoFi right here at $13 rate cuts? Do you think there's any asymmetric bull case with rate cuts in SoFi and the banks in general?
I think SoFi can benefit significantly from student loan refinancing, because that's kind of one of their core businesses. And one of the good things about SoFi is that they're very, very strict with their lending standards.
Yeah.
So
even you got rejected for a loan, right?
Well, for a personal loan, I was just like, oh, let me try this out, and I was like, I got rejected. And I was like, what the fuck? Like, I make a crap ton of money. Like, the hell? And I have assets. Why the hell did they do that? And yeah, but to me, I think what they really, really do, to be honest, they just lend to a lot of doctors and nurses and lawyers and shit like that. So regardless of your actual credit, what they really do is look at your profession. And they basically base your credit based on your profession, rather than basing it on like FICO and other stuff. I mean, at least that's my theory. I don't know if it's 100% true, but that's what I've seen. And that's how they started off too, like literally lending to medical professionals.
Right.
You know what really pisses me off?
What?
Well, it's not pissing me off, but my sister-in-law, she's a doctor, right? You know that banks will give her like 0% loans because she is a doctor, like for a mortgage. Like, she got a doctor loan.
But don't doctors have a shit ton of debt?
They do, but that's the thing. They'll ignore it because they have a ton of income also, right? So if you look like just type in Google doctor loans, if you have a certain profession and you're working, they will give you a much better rate than someone like me. I'm not a doctor, but I have really good credit, but they would prefer her because it's less likely that she's ever going to have trouble financially. Whereas I guess for me, if I lose my job, I lose my job, even if I am a good payer.
You and me are we didn't fulfill the Indian dream of becoming a
No,
doctor.
we
Like,
didn't. We
that,
didn't.
like, dude, the amount of, like, one of my friends who's also Indian, he's like in the process of becoming a doctor. I mean, Indian parents, bro, you become a doctor, you've basically given them the most amount of happiness they could ask for, you know?
Oh yeah. Oh yeah. Yeah.
But you and I went the other way. We
Yeah.
became investors, which no one
Yeah.
respects. Investors can make more money than doctors, but no one gives a fuck. Being a doctor, the prestige is just like,
Yeah, in the Indian community, bro, it's you start at, hey, what do you want to be in life? And if you say anything other than doctor, it's like, ah, you just want to fail at life, don't you? It's like, come on, dad. Like I want to. And the funny thing is, I think the levels are doctor, and then engineer, and then maybe like lawyer, right? And then everything after that is just you've pretty much failed at life, right?
yeah, dude. I
You
mean,
know,
when
you can-
I'm at these Indian house parties or whatever, and like I have to say, like, they're like, oh, what do you do? I'm like, oh, I'm a YouTuber. The amount of disgust, in their faces. They try to hide it, but you could tell they're like, oh, cool. And I'm just like, yeah, you don't give a fuck.
Yeah.
I do. It's okay. It's all right.
Check this out. So let me just show you an example of here it is. Look, this is from Bank of America. Okay, it's a doctor loan when you're buying a home. Okay, so right here, 3% mortgage, 3% on mortgages up to 850,000, 5% mortgage, 5% on mortgages up to 1 million, 10%. So the down payment that you need, you only need 3%. Okay, to get 850,000. Now, yes, you could probably get a FHA for 3.5, but trust me, you're gonna get like whacked on the interest that you're gonna end up paying. With doctors, they get a better rate. The only people that get even better than all of this stuff is me, because I'm a veteran. So I have the VA, baby. Zero down payment, baby. All guaranteed by Uncle Sam. Zero down payment.
Well, you deserve. We need to treat veterans better in this country, so you absolutely deserve it. You
Yeah,
absolutely deserve it.
yeah.
Kris, a question for you on this. So we talked about the refinancing stuff. We talked about rates. China. So Besant and Switzerland and the Chinese vice premier. Apparently, it's happening. Do you think it's BS, or you think we're getting close to a real start of negotiations now?
I mean, I think both countries, they need to get this thing done. Like, it's not going to work out well for either of us, you know, long term. I mean, this is just one of those things where, you know, we have interdependent economies at this point, right? So we have been their largest consumers. They've been our largest producers. And this has happened for 20 years. You cannot undo that in a heartbeat. You know, it takes time to undo all of these things. And it's one of those things that you just have to, you know, figure out how to re-engage with them and make things more fair with the Chinese.
Right.
You know, so we'll see how things go. But the Chinese, look, they've definitely taken advantage of the situation with the United States. They have been subsidizing their industries, but the reason why they've been subsidizing their industries is because they literally they went from agrarian to trying to industrialize. So if you're trying to do that, and they have 1 billion people, so they're trying to look out for the welfare of their people. So their job is, my job is to look out for my people, regardless whoever hurts on the other side, right? And so I think a lot of people are like, well, China doesn't do fair trade with a lot of countries, which is exactly what every single country tries to do. They try to make the system favorable to their own people, you know? So I think, but in the past, the US has been a lot more lenient on some of these countries, in that when they took advantage, the US would kind of just like look the other way and say, you know what, you're developing, it's fine. Like, you know, if you want to do this. But I think the Trump administration, rightly so, said, no, you're not going to do that shit with us anymore. You are going to live up to your World Trade Organization obligations. You're not going to manipulate your currency and try to get one over us, right? You're not going to try to export a whole bunch of stuff and dump it into our country and basically crash our critical industries. So in that regard, I think the Trump administration is right in doing it, but there's a way to be diplomatic about it and make sure that you're getting the best deal for you, but at the same time, you're letting it be something that's palatable for the Chinese. And not to mention, the Chinese themselves understand that they need to become more consumer focused. Their GDP has to move to a consumption based model. Otherwise, they're going to have, I mean, you could see their GDP. It's absolutely collapsing. You're going to have another Japan like lost decade, you know, and you don't want that.
So bullish. You think a deal is on the way, essentially?
I think it's going to be something that's like halfway between free trade and what we have right now. So I can't say for certain that I think it's going to be like completely like, oh yeah, we're going to go back to how it was before with zero tariffs and zero barriers between us. I think that there's definitely going to be something that's there that, you know, and the part that I would say I like about it, that I also don't like about it, is that there's a lot of businesses in the US that are so tied to China right now with their production that they need time and a ramp to basically get off of 100% China as their core supplier, right? And I think the American businesses, bro, one of the best things about being in the US, I have seen American entrepreneurship. We will figure out how to do business. All right. American businesses, they're not the type that are just like, oh yeah, you know what? I had a supplier in China, now I don't, so I'm just going to close shop. Like, no, they will innovate. They'll figure out how to make everything work, you know, but you got to give them the time, opportunity, resources, and capital to do it. The entrepreneurship like culture in the United States is second to none. You know, our laws are second to none. So like I said, I don't have a problem with what the Trump administration is doing long term, especially if it gets us into a better position where our companies can actually sell into other markets. I just don't like it in the haphazard way that it was done, with you literally doing blanket tariffs. And then also, I think I'm very against punishing Mexico and Canada, because they're literally our strongest allies. And at the same time, they are one of the most effective, in my opinion, long-term strategic partners to counter China in the future.
Well, Trump seemed pretty amicable with Carney yesterday, right? I mean, there wasn't a blow up in the White House. They weren't, you know, there wasn't that much 51st state stuff. I mean,
yeah, and you can see the same thing with, I think Gloria Sheinbaum from Mexico.
Yeah,
you know, if you see that, they're very cordial, they're very focused. I mean, and also the Denmark thing is starting to kind of come down a little bit with the Greenland thing. So I think the administration's starting to kind of like be a little bit more nuanced with how they're approaching these things, because they really don't want to cause a recession. I mean, we still could get a recession. Don't get me wrong. I mean, you already kind of made the bonehead move of going 40%, 50% tariffs on Lesotho. So it's really hard to get that genie back in the bottle. But
you got my cough. Quick question on Hims. Then I want to ask about Disney. Are you buying this thing? Are you buying into the hype? How are you thinking of it?
I've had a position in Disney for a long time.
No, Hims.
Oh, Hims. You know, I don't know the business model well enough on Hims to say that this is going to be 100% growth forever, especially considering that a lot of their growth is coming from GLP-1 medications, from what I can tell. But I haven't done enough research on Hims. I really do kick myself a little bit for not doing more research, because one of my friends, I don't know, do you know Sam, right? Sam Mercier? Yep. He's mentioned Hims for like literally the better part of like 2 years to me. And I'm just like, I'll look at it another time. I'm not really the biggest fan of pharma companies unless like they have some really breakthrough stuff. And so when I looked at Hims, I was like, they're like an online retailer of prescription, like, you know, low cost prescription medications that are more tailored towards men and women. I'm like, that's not a growth market, but apparently they're doing really well and they're making a lot of money. They've got great customer satisfaction. They do spend a lot in marketing. So I quickly looked at their balance sheet, and I was just like, interesting. You know, they just seem to spend a lot of money on sales and marketing.
Is that why you think it's shorted 30%? Like, what's the logic there, if you had to guess?
I don't know. I mean, they're trending in all the right directions. So it's hard to short a company that's trending in the right direction unless you suspect fraud.
Yeah.
You know, unless you, like, when you see a business doing too well, sometimes that kind of opens the door to like, hey, is there some fraud going on? And there could be people loading up on a short position, hoping that they can uncover some fraud, but they'll do it. They'll only tell you that this is a fraud after they've taken the giant short position.
Okay, so last question for you, Kris. Disney, you've loved this name for a while. You had a position a while ago, got out of it. It's up 10% right here. I don't think you still have a position, but does it deserve to be moving 10% on a parks announcement over a software announcement?
I think with Disney, people have to understand that their biggest challenge. They had two major problems. They swallowed Fox, and they got like a piece of Hulu from that. And the thing is, they overpaid, and they overpaid by a lot. So they took on a lot of debt, right, just to get that acquisition done. And then COVID happens and everything else. And so that's one thing that kind of like hindered them a little bit. Because the business generates a ton of cash flow. Yeah. The second thing that happened with them is that they used to make a ton of money on DTC, right? So when you turn on your TV and you're watching a TV channel, you get ads shown to you, right? Like when you're watching commercials. So they used to get a lot of revenue from that. And that's high margin revenue that used to support their earnings. But dude, I don't remember the last time I was watching a regular TV. I usually watch YouTube. I watch Netflix. Sometimes I watch Disney Plus for like some of the Star Wars content. So all of those things, they add to this growth vector, but it takes time to get that monetization in there, right? So right now, yes, they're ad supported, but they were making so much money on DTC that now that DTC revenue is coming down. And so that's, not DTC, sorry. I think it's not DTC. What is it called? I think I'm actually making a mistake calling it DTC. It's basically it's like TV ads. Like TV ads is a dying business. But they used to make a ton.
OTT, I think, is what you mean.
OTT, I think, yeah. Over the air ads, yeah. So they're basically losing, they're not losing money on it, but they're just not making as much. So over time, this Hulu Plus subscriptions, the Disney Plus subscriptions, they're making a difference. The other thing is they've been able to raise the prices at the parks to a really high degree, and still they've got like sold out crowds. So they're generating a ton of operational cash flow from that. They used to have a lot of money coming in from like movies, but they've kind of haven't done too well on that part because of some of the creative decisions that they made. But other than that, if you look at like how much money Endgame made, like Marvel, Avengers Endgame, they made I think like close to $1 billion or something on that thing, like in profit. So they don't. They haven't had
hoodie back above 50. We got back above 50 on hoodie. So there you go. Go ahead, Kris.
Yeah. And they're buying back. I think they're buying back shares, and they also have a dividend. So, some people just love Disney for that. Now, one of the things about Disney that people don't realize is that they have a lot of assets that they can actually depreciate over a long period of time and still generate a significant amount of cash flow, And this is something that I think Warren Buffett spoke about like a while ago. If you have a minute, I'll show you. And which is why Buffett actually loved the business of Disney.
Hood right here is at 50. Hims is at 51. Nvidia's at 113. That one's still red. Pounter holding on to 110. It looks like Hoods and Hims are in Disney. Disney's the biggest mover, but Hood and Hims, both of them moving pretty nicely right here. And then Tessie 276, that one's also green. AMD, I don't know what happened. Jose's going to be on in a little bit, but AMZ did have a 3% pump, and that is now going flat. So AMD going right here. Which gets to 100 first, Hims or Hood? That's a good point. Put it in the chat. I'll do a poll as well while Kris loads up this video. Hims or Hood, which gets to 100 first? For Hims to get to 100, it would be a $20 billion company. For Hood, it would have to be like an $80 billion company. So theoretically, I could see it happening for Hims quicker, but
let's dissect that comment that you just made. People really should stop looking at companies purely from a market cap standpoint. And let me tell you why. If your share count goes down by 50%, but your earnings only go up by 10%, your stock will still skyrocket. Why? Because you're buying back a ton of shares. So look at the share buybacks that Hood is doing.
That's fair, but Hood's not buying back that much stock, bro. They still have 1 billion shares outstanding. It's gonna.
No, I know, but what I'm saying is, over time, you can see them. Their cash flow is just getting heavier and heavier, and they're just buying back more and more shares.
That's true.
Is Hood buying? Is what do you
No,
call
not
it?
yet. Not yet. Not for
Hims. Is Hims buying
Wait,
back?
wait, are they? Nate, how much do they buy back? He
Yeah.
says they do. How much do they buy back? Let us know. Oh, Kris, you have the video? The bucket video?
Yeah, it's kind of long, but I
Okay,
mean,
never mind. Yeah, we don't need to.
Yeah.
That's fine.
Yeah. But basically what it is you create this content, and then it's everlasting content that you can monetize for like literally eons. Like Mickey Mouse, that thing was designed like 100 years ago, and yet they're still generating copyright revenue from all the Mickey Mouse stuff. Same thing with all these Disney movies and all this other stuff. So, yeah.
Got it.
Yeah.
All right, cool. Kris, thank you. Appreciate it. Final word on Jay Powell and the Fed. You think he goes hawkish or dovish today?
I think he's going to be very careful with the wording that he uses, because I think all the data that's probably in front of him is screaming recession. Okay, because all the data that's the same data that they use is the same data that I'm looking at. And the one thing that worries the shit out of me, and it should worry the shit out of everyone, is shelter. All right. No one is, well, at least not a lot of people are talking about shelter, but shelter inventory is absolutely skyrocketing right now. Okay.
Yeah.
And when shelter inventory skyrockets, there's three things that happen. Builders, they have to cut back. Okay. Because the thing is, new homes right now, there's more new homes on the market than like the last time there were this many new homes on the market. It was like 2009. Right. So huge numbers of new homes on the market. There's a lot of construction in multifamily, so that's there. Then you have like vacancy rates are climbing on rentals, so rent prices are kind of moderating. Shelter prices are coming down, so you're starting to see a lot of regions, like especially in Texas and Florida, like literally inventory has gone absolutely berserk over there. Colorado's I think in the same boat right now. California inventory is starting to spike a little bit. So there are regions in the country where inventory is climbing, and so new builders, like home builders, they're the first ones, like home construction. They see that there's not as much demand. What do? They don't build more homes, and they start laying people off, right? So now you've got this whole segment of people not building things. They're going to end up unemployed. And then you have all these people that were making commercial buildings before. Commercial real estate is basically dead because vacancy rates are high. So no one's really building that anymore, right? Then you've got oil.
Jay Powell needs to worry about shelter and oil, essentially.
Well, oil is another major problem. All of the people that work in the oil patch, in oil and natural gas, with oil prices in the 50s, it's good for the consumer because it's like, oh, we're getting cheap gas prices. But it's really, really bad because all these companies are going to scale back their capex and they're going to fire all their oil workers. Okay. And the oil workers are going to all be on unemployment.
Yeah.
Right. So unemployment is going to climb. So you've got a lot of like headwinds coming for the economy that we have to be very careful with. And if Jay Powell doesn't, I think things are going to get pretty hairy for the next like 6 to 9 months, and we'll get over it because we are who we are. But yeah.
All right, Kris Patel. There's his Twitter right there in the chat. Kris, thank you. I will talk to you tomorrow. And thanks for the explanation of the bond stuff, because a lot of people, including myself, definitely
yeah.
That, so
there's a couple of things that Scott Bessent is actually working with the FDIC and with some of the regulatory agencies that's very underappreciated right now, and that's changes to something called SLR. And maybe one of these days I'll actually explain the damn thing, but it's something that could provide a big liquidity boost to treasuries and long-term treasuries in the future. So yep.
All right. Sounds good.
Brother.
Thanks, Kris. Bye. Talk later. All right. Let's bring on another analyst to help me figure out what the hell is going on with AMD and hopefully help everyone else figure out what's happening. Jose, good morning, sir.
How's it going?
It's going well. Can you say something again?
Testing. Is my mic down?
I don't know if it's connected to that actual mic. It's a little, guys, it's not just me, right? I think his mic's a little. Just say hello. I love AMD.
AMD. I meant to say NVIDIA.
It's definitely going in and out, guys, right? It's going in and out.
Second.
Yeah, so I think switch the mic. Even if it's your computer mic, it's going in and out. We'll try that in a second. He had my problem from yesterday, dude. My mic didn't work for like an hour yesterday. Sheen mic. Well, we don't have any more Sheen mics. We're done with that. All right, try now. Okay, he's working on it. All right, cool. He's gonna rejoin. AMD right here, 99.08. That's down about 0.5% right now. Bitcoin, 97,000. You got 97,381 right here. Robinhood, 50.30. Wow, hoodie. Really getting a little bit of a breakout. Also, SoFi, I mean, both of them. Look at SoFi, up 4%. I don't know why we're actually pumping this much. I think it's the expectation that J Powell's going to be dovish, and if he's not, this could all go away. So if you're day trading this, I mean, you got to watch out for what J Powell says. But maybe this pump is due to China progress and then potentially a dovish Powell, which means more rate cuts, which is good for Hood and SoFi. SoFi for the refinancing of their loans, and then Hood for transaction volumes. So both companies will benefit from lower rates. The question is just when we get those lower rates. All right.
Testing. 1 2 1 2. Any better? No.
It's a little bit bad, but it's way better. It's way better. So I think we're good.
All right. Not sure what's happening here.
No, it's dude. Trust me, I deal with it every day. So AMD raw reaction to those earnings. What'd you think?
I mean, we saw a huge growth in data center year over year. We saw growth in gaming. Some great commentary from Sasu about kind of like the future.
Okay, never mind. It sucks. Yeah, it's bad.
That's all right. I'll be back. Anything get this fixed.
Yeah. Okay. So here's what I would do. You have how many mics do you have? You have one mic, right? Just that one?
Yeah, we have one.
What about the computer mic?
I don't have a computer mic.
Okay. So sometimes that
I'll just do a quick turn off, turn on. That usually fixes everything.
And if it doesn't work, remember, first of all, everyone loves you, so no one's gonna care. Number two, it's not your fault. It's StreamYard. I'm telling you, it's fucking StreamYard every time. So if you got to come back on the market close, we'll have you on the market close. The other thing I could do, guys, I could just call him on his phone. We could have him do a Steve version of the show. So I'll text him right here to get his phone number. Give me your phone number. I'm telling you, bro, if someone wants to build a competitor to StreamYard, I will fund you guys. This freaking platform is so. I'm telling you, this is StreamYard's fault. Jose's mic works every day. Why is it not working right now? It's not his mic. My mic works every day, and then randomly yesterday, after 3 hours, it stops working, and then when I switch to a mic, a new mic, it works. Like, I really do think this software has issues, and it's not my compressor. It's not my what do you call it? Infrastructure to connect the mic to the laptop, because I bought a new one 2 months ago and it started fixing a lot of the problems we had last time. But then my bell got compressed this morning. Like, I'm telling you guys, this is StreamYard's inability to deal with the audio. It's not my computer. I just spent freaking $4,000 on a new computer. It can't be the computer. I would hope it's not the damn computer. Like, I think it's StreamYard. And the problem is there's not any good competitors to StreamYard. All of them suck. And OBS is a whole host of different technical issues. So I don't use OBS, but OBS also uses a ton of compute on the local storage of the device, whereas StreamYard does it through their application layer, which is it makes it less intensive. But I feel like it's more of a StreamYard thing right here. Bitcoin 97.3. That is green right now. Where's Palantir? Are we green on Palantir? Palantir right here, 110. So Palantir is still holding up that green. Again, J-Pow, that's going to be the most important thing today. See what we've got. Here's the Disney CFO. Let's get some of his thoughts real quick while we wait for Jose, and then we'll keep going from there.
We're combining things where we can as well. But I don't know that I'd call growth.
Okay, Jose is back. Let's see if this works.
All right. I mean, I tested on my audio thing.
Good. You're good.
All right. Good.
You're good. You're perfect. All right, here we go. AMD.
So
did you like it? Did you hate it? What do you think?
I mean, I like the earnings. I mean, we saw kind of a growth in data center year over year. We saw growth on kind of their client side. We saw kind of some bullish sentiments that the embedded market was going to kind of see year-over-year growth in the second half. Now, the reason I believe maybe the market is not too excited is, unfortunately, while we did see year-over-year growth in the data center market, we did kind of see maybe a bit of a decline on a quarter-over-quarter basis for the data center space. So many investors are saying, how can this be kind of a great AI company if you're kind of seeing sequential drops? This is not something that you see in companies like NVIDIA or other AI plays, where you're kind of seeing that data center market, it continues to rip every single quarter. And the other thing is the Chinese market, right? We kind of saw the export restrictions. AMD took about an $800 million write-off hit. But I think, I don't know when I was on, if it was 2 days ago, we kind of talked a little bit about it, how that hit was just an inventory hit, but the actual revenue hit was expected to be much higher. And they did mention that the actual revenue hit was going to be roughly about 1.7 billion that they lose in revenue because of it. Obviously, you sell your inventory at a higher price. So I think for AMD, the big story for AI is still in the second half of this year. And analysts are saying, hey, look, why is it not happening right now? Why do we have to wait to the second half of the year?
Okay, so the stock went red yesterday on the call when they said data center revenues is going to be flat in the first half. Is that bearish? Are they sandbagging? Like, were you upset when you heard that?
I mean, I think in the first half, it's to be expected with what we know from AMD. Like they mentioned, the Chinese revenue for Q2, I think, is going to be a $800 million hit in revenue. So that's going to create a massive headwind for them on the year-over-year growth because they can no longer do that market. And the other thing is AMD's kind of real chip that they're super excited is not coming out until June-ish. I think it's June 20-something is when they talk about their next chip. And that's the one that they keep hyping up. That's the one that keeps kind of being the one that's going to drive a lot of growth for the AI market. So I think, again, we're not going to see much growth from this MI300, the MI325, but the MI350, which is in the second half of the year, that's where all the excitement is coming from. Now, there was one thing that was interesting that I don't know if many people caught on. AMD did mention 2 things that were pretty bullish. The first thing is they mentioned that some of their cloud server providers that were using the MI300 and MI325 were increasing the usage of it for things like ad search and things like recommender systems. I would think maybe that might be Meta Platforms that might be spending a little bit more money on them. And then the other thing that they mentioned that this quarter they saw a huge AI foundational model company starting to use their AI chip. I think they wanted to give us a little bit of a preview of what was happening with their AI chips, but they're saving kind of like the big bang for their AI event next month.
Who do you think that company is? Do you think it's Anthropic? Do you think it's OpenAI?
I think it's OpenAI, and the only reason I think it's OpenAI is because OpenAI uses Oracle for a lot of their infrastructure now with the Stargate program, and they even talked about how Oracle was kind of building this massive AI GPU data center using some of AMD's chips. So I think it's by proxy that it's OpenAI because Anthropic is full on with Amazon, and I can't think of any other big AI foundational models. Also, Microsoft used the MI300 as well, and that's something OpenAI did. So I think it's going to be OpenAI, and I think we're going to see OpenAI at maybe the June event for AMD in the AI space. And let me just say, even though things are looking bullish for AMD right now, I would say that I don't think NVIDIA investors should be worried. This is kind of breadcrumbs compared to what NVIDIA is making in these numbers. So I get a lot of questions, Jose, when you talk bullish on AMD, are you bearish on NVIDIA? Not necessarily true. Both could be very, very bullish in their own space.
So if AMD is lowering their guidance for Q2 revenues on data center, does that mean we should expect weakness for NVIDIA, or is NVIDIA just in a different league?
NVIDIA, I think, is it's going to be it's definitely a question to have because, right, NVIDIA, I think, took about a $5.5 billion inventory hit for this AI export restriction laws. Now, if you kind of do the math backwards, they have about a 70% margin on chips on general. So that would be about $18 billion in revenue that they're going to expect to create a headwind from these export restrictions in China. Now, the question is, do we have enough market demand everywhere else? I think from what we're hearing with capital expenditure, what we heard from Supermicro yesterday, I think the appetite is still there for NVIDIA, who is the top player. So while I think while they both fit in the AI space, NVIDIA, I don't think is going to see a reduction in guidance this upcoming quarter because the appetite is still pretty insane for the Blackwell system.
This has been really interesting. I was listening to the call yesterday, and again, when I looked at the numbers, I mean, some of this Q1 growth was just incredible. I know Q1 2024 was a easier quarter to comp against, but yeah, net income up 500%. I mean, it's not like they're slowing down, you would say.
Yeah. I mean, the great thing is with this company, I mean, they are still, I don't know if it's great, but they're still very consumer dependent. So about a year ago, we were still in a massive over inventory correction in the PC space. So they had to sell their goods at cheaper prices. Now they're saying inventory correction has kind of eased already, and they're seeing kind of better opportunities and have increased the average selling price. So that's why you see revenue up a nice amount, but that earnings per share is up dramatically versus a year ago. The other thing is if AMD took a lot of shots at Intel, not directly, Lisa is not that type of CEO, but she pretty much mentions that they're taking market share in all over the PC space, the laptop space, the server space for CPUs. So there's also that CPU story still going on for AMD.
We got some questions in the chat about x86 in general. Your thoughts on that architecture and if it is a growth driver for AMD?
I mean, x86 I think is going to be here for a very long time. I mean, I think if AMD believes that wasn't a growth opportunity, they will eventually move to an ARM-based architecture. But I think x86 has their own pros for one. A lot of ISVs are using it and have already kind of integrated and done a lot of efficiency gains on x86 versus ARM. So I think there's going to be an ecosystem where both work. I think for your traditional consumer and server CPUs, x86 is still going to be the dominant player. But yeah, I mean, there's obviously the opportunity for ARM, and ARM is definitely reporting. I think it reports later after the market closes.
Right. All right, that sounds good. So makes sense on AMD. On terms of NVIDIA, we've got earnings in a month. Do you think the street is going to have unrealistic expectations after AMD earnings here, or NVIDIA still expected to put up $40 billion in revenue and keep their growth rate at 70%?
I think that demand for AI is still pretty insane. I mean, OpenAI, I don't know if you saw the quick news that OpenAI released today. OpenAI is kind of saying that they're open for business for Stargate projects all over the world. And the reason they're doing that is they're seeing a lot of demand globally. So obviously this is a completely different project. So it'll be like the Stargate India or Stargate, whatever US allies are out there, like the UK. So those are massive AI infrastructures if they come out. And that's going to be mainly driven by NVIDIA GPUs at the moment. So I think,
Jose, are people freaking out about? I mean, OpenAI, 10 global sites for more data center expansion. Like, is everyone underestimating how crazy this revolution is going to be? Or in 5 years, are we going to look back and be like, man, that was a good revolution, but it wasn't like some internet revolution? Like, where is your head in terms of how crazy AI is going to become and what it means for NVIDIA and AMD?
Yeah, so for me, I think the AI revolution is going to be much bigger than the internet. I think it's definitely going to change the complete way that humans use technology. Now, the real question, right, is when is that going to happen, or how quickly are we going to get it, right? So I think maybe OpenAI might be a little bit too bullish into it, like maybe 2-3 years, not much changes, but maybe 5-7 years, things could be crazy. But I think right now, we're hearing it from all big tech players. You rather overinvest in this space than underinvest, because if AI is as crazy as I think and as crazy as all these other CEOs think, you're gonna not want to miss a beat. Because if you miss a beat, that's gonna be the end of your cloud infrastructure. That's gonna be the end of your software space. It's gonna be the end of being a market share leader. So I think that fear, as long as that fear is still there, of not pushing into this crazy technology, we're going to continue to see massive demand. Now, at the end of the day, it's also going to determine on how innovative and like if chips. Right now, we're seeing massive jumps in chips performance, right? Like the Hopper is nothing compared to the Blackwell. And we
Right.
hear that the Rubin is going to be nothing compared to the Blackwell is going to be nothing compared to the Rubin, and so on and so forth. The moment we start to see where chips and the software start, the performance gap starts to close up, I think that's when it's time to maybe get a little bit more worried. But when you have these massive leaps in performance on a yearly over yearly basis, then I don't think there's much to worry about. Obviously, things can change dramatically, and that's the fun thing about the AI space. But right now, I'm pretty bullish in this market for sure.
I would agree. Here's one last fun question for you, Jose, and I would like everyone else in the chat, you could answer this as well. What's an example of AI that you are seeing in your daily life that you are really using? Take 30 seconds to think of it. While you're thinking, I'm going to give a little plug to What the Chip Happened, which is Jose's newsletter. Please make sure to subscribe to that because that gives you daily updates on what's going on in the world of semiconductors. But given we're talking about how transformational AI is going to be, like, is there something you're using AI for every single day that, like, really you're realizing, hey, I can't live without a type of product like this anymore?
Yeah, I mean, obviously my mind is always going to be kind of in like the content creation and research phase. I use ChatGPT. I pay for the $200 a month version, and I use it every single day. When I'm reading a transcript, I already know what to look for, but I want to look like other perspectives. So I use AI to kind of just help me improve my research. I want to be, let me just say, my goal is to become that semiconductor guy, right? Become that massive semiconductor research entity. Unfortunately, I don't have the ability to pay 5 other interns to come help me out and become this massive firm. I think with things like OpenAI, my goal with AI, my goal is very, very much feasible. So I use it because a lot like an intern research team to help me collect a lot of data. I have a lot of kind of automated systems that I get a lot of information about the semiconductor space, about technology on a daily basis sent to me on email thanks to AI. So it kind of just helps me kind of with my research process. Then with content creation every single day. I mean, I do a lot of thumbnail variations on my YouTube videos. You can, for those that are not familiar on YouTube, you can kind of put 3 thumbnails at a time. I do one myself, and the other 2 are created by AI. And the ability for the creation that I see from AI is insane. And then sometimes as I also use it. I'm a dad right now, and sometimes I'm don't know what the heck I'm doing. So I ask AI for help, for toy recommendations, for food recommendations. So outside of the research stuff, I use it pretty much on just random information that I need in the daily basis.
Well, I didn't know how many Mucinex I was allowed to take. I could have just looked at the back of it and read it. So I took a picture. I asked ChatGPT, how many can I take an hour? And it's just becoming a part of my life, which I think if it's going to get smarter and smarter, then obviously this AI revolution has some legs to it. So,
and I think the great thing is, for me, it's starting to become a place where it's not a different technology that I'm using. I think the worst thing is when you got to go out of your way to use something. But I believe the friction of using AI is so much smaller now that it's pretty much like using my phone. So it's and I think eventually we're going to see. Obviously, I'm a little bit more focused in the tech space, so maybe I might get into some of these markets a little bit or use some of these techs before the consumer space. But I believe eventually the consumer market is going to see the vast ability that AI can be used for.
I love it. Jose's Twitter. Jose, thank you so much. We will see you next week on the show.
Yeah, and before I head out, man, congratulations for yesterday, for real, man. I mean, as a content creator, I know how hard you put in for the work, and it's awesome. I'm really happy for you, bro. So congratulations, and I think you're going to be one of the next ones to hit 1 million subscribers here. So I just want to say congratulations, man. And I know you put a lot of work into this. So your community loves you. I appreciate you every time you have me on. So I just want to say thank you, and it's cool to see the ride for you going up. So congratulations, man.
I appreciate it, brother. And the only reason, we even have this community is because people like you take the time to talk and be part of the community. So they love you and we appreciate you. And thank you for being here. Thanks, Jose. See ya. All right. Google's down 4% because Apple is exploring adding AI search to its browser. Apple is exploring to add AI search to their browser. That's why Google is down. So there you go. I think it's a bit of a knee-jerk reaction. I don't think that's, ironically, speaking with Jose about AI and how transformative it is, if Apple adds AI search to their browser, S&P, wow. Did Google really cause that? Because Besant just said a lot of good stuff. Besant just said, hey, we have negotiations that are advancing towards an agreement. We are beginning the talk. We don't have an actual discussion, but we're getting close to the framework for negotiating. Like, but Besant just said a lot of good stuff. And then this Apple news apparently is what's hurting Google. Where's Apple right here? Apple stock is down about 0.5%. So Apple not really benefiting from that. Google just getting nuked, down 3% on Apple exploring to add AI search to its browser. Well, this is inevitable, right? We thought this was going to happen no matter. Apple was never going to keep paying Google with the amount of antitrust that Google's dealing with and AI features that Apple could implement and easily redefine the search experience. I mean, Apple's been paying Google, or Google's been paying Apple for the past 20 years because we haven't had a realistic solution to search, but now there is. And this goes back to the bear case on Google, which is that search is getting commoditized. So here's the headline. Apple says they're exploring advanced AI search to Safari. Perplexity and Anthropic are among the options being considered. Wow. Perplexity in Congress, huh? Or sorry, Perplexity and Anthropic. Besant's live in Congress right now. Dude, Perplexity. If Perplexity got an Apple deal, that would be pretty freaking big news. Google down 4% on this. My goodness, dude. After the quarter they had, Street does not care at all, because if the future of search is going to die out, which I don't think it will, but at least these headlines make people afraid that it could. Yeah, that can definitely affect Google. That could definitely affect Google. How many people think this is bad? I mean, I think this is definitely not good. I don't think it's necessarily bad, especially because Apple has to meaningfully create. Like, look, the reason I use Safari on Apple is because Google search is really good. And so on Safari, I just type something in and I get a Google search. If they give me some Perplexity type of search that I'm not a fan of, I don't know if I'm going to keep using it. Now, granted, Apple has the distribution. They have all the leverage against Google. For the past 20 years, Google had leverage because there was no other good search engines. Now, with ChatGPT, I mean, that leverage is slowly dipping aggressively. But the question is going to be, how much is Apple going to be able to impose that on their users? Robinhood right here, 49.31. They were at 50. That's dying out. Hims was at 51. Hims is now at 50.5. So that one taking a hit, and then Palantir from 111 to 110 currently right now. Damn, dude. Google, it's so undervalued in terms of just pure multiples in the Max 7, but this is the headwind that has been inevitable for Google, which is that if search is going to start dying out, can you survive in an economy that doesn't care about blue links anymore? And I think Google will. But, you know, the bears do have a point where the search volumes grew 10% this quarter versus freaking 14% 5 quarters ago. So we are seeing a growth decline in search, even though it's still putting up big numbers. But if investors are looking forward and that 10% becomes 7% in the next 3 quarters, I mean, you know, that can definitely take a hit on the multiple.
Some comments saying that China negotiations will take place in Switzerland on Saturday. He says they are not advanced discussions, but rather a beginning for talks. He said that some trade negotiations are, quote, quite advanced towards agreements in principle, but he would not say which countries might reach a deal with the U.S. this week, saying it would be detrimental to U.S. interests. Maybe David Market was looking for a little more granularity, given some of the promises or reassurances we got from the president in the Oval yesterday.
Yeah, I mean, some of the comments as well, I think, in terms of China graduating from developing countries, that nothing, right? You're looking for anything positive. Obviously, the idea that there are going to be talks that are getting underway, perhaps as soon as this weekend in Switzerland, is a positive. But as you see, the Treasury Secretary there, but of course, everybody trying to understand as well what exactly that means in terms of de-escalation, where we will end up. In terms of what the tariffs may end up being. And we are seeing, you know, a little bit of strength in the market.
So again, that news not good enough to hold up the markets. This Google news really confusing, that Google's getting hit this badly and Apple's not getting any love. Now, granted, Apple doesn't need to go up on this because Apple hasn't implemented any AI software search yet, right? And no one really knows if it's going to be better than the user experience right now. But I can understand why people are dumping Google. I don't know if this is the reason to take Google down. I could see it perceptually as a reason, but realistically, in the next year, is Apple going to just replace Google on the 2 billion iPhones they have and completely make Perplexity the default engine? Like, I find that hard to believe. Nonetheless, it could create some headwinds on overall search revenues. For those that are just joining, Google is down because Apple is planning, according to rumors, an AI search engine powered by Perplexity and Anthropic. Google currently is the default search engine on the platform. And it looks like Google might be being replaced right here. Apple's not going to make any more money off of this. They're just going to change providers. It might actually cost them more. Yeah, that's actually a good point. I mean, to be honest, it could actually be costing Apple way more than saving them money. And then the growing pains of people having to adapt to a new search experience, are people going to like that if Apple imposes that on them? So that's another thing we have to think about in the context of Apple. But for Google, you could obviously see how it's maybe not the easiest headline to consume. Also, Google is paying Apple for their, that's logical. I mean, if Google is paying Apple $20 billion a year for their search, and then Apple replaces Google, Apple doesn't get that $20 billion. Technically, that saves Google $20 billion. I'm sure it's not going to be all $20 billion, but let's assume it's $10 billion or whatever. That saves Google some money, but the ROI they get on that $20 billion is way bigger than the $20 billion itself. Apple, it's going down because they're not going to get that $20 billion if they end up replacing Google completely with Perplexity. And I don't think Perplexity is going to pay Apple. Like, it would be really interesting to see if Apple says, hey, we had a great deal with Google. They were paying us billions per year. You and Anthropic have to pay us money. I feel like Anthropic and Perplexity would be like, wait a second, why would we pay you money? Like, you're getting our AI technology because you guys didn't do shit for the past 10 years other than make AirPods. So why should we be paying you? And you see Apple right here down another 1%. I mean, that could actually be definitely not the most bullish scenario for how Apple reacts to this news. Google right here down almost 5%. Last time Google went down 5%, I think was a month ago. It doesn't easily go down 5%. Google's kind of like Microsoft. They're relatively flat without a catalyst. And this is the catalyst that we are seeing right now. It's weird, dude. That's weird. Doug says Anthropic and Perplexity can't do much more than Gemini does. Google totally can stay in the running gear. Well, yeah. I mean, why wouldn't Google just offer Gemini to Apple and be like, hey, we don't have to fully break up. We can change the nature of our relationship, but we don't have to literally stop talking. Gemini can get access to a lot more users as well. I'll put that in the chat right here. By the way, it was 50-50 on Hims versus Hood for which one gets to 100. It was 50-50 on 2,000 votes. Is this Apple news actually bearish Google? What do you guys think? Also, we got JPOW in 2 hours, dude. So in the midst of this, we still have to deal with Jerome either giving us hawkish news or hopefully dovish news. You saw what happened to Qualcomm after Apple started designing their own chips. That is a fair point. Apple has been rather ruthless when it comes to this type of stuff. But they've needed Google for 20 years. I mean, for them to step away from them would be a big 180. Okay, so there is some other news on Google. Apparently, there's a malware thing going on. Let me see if I can get the exact headline right here. I don't know if that's as big as the Apple news. Google Threat Intelligence Group has identified new piece of malware called Lost Keys attributed to ColdDriver. ColdDriver using new malware to steal documents from Western targets and NGOs. That's from the official Google blog. I mean, look, that could be causing a 5% dump, but I don't know if that is connected to Google's earnings. Like that's not good. That's like CrowdStrike. Like, yeah, it's bad. It's not as bad as CrowdStrike was back in August. It's not good. But Apple getting rid of Google search is like legit bad for Google search revenue. So I feel like the Apple revenue or the Apple headline is creating more of this dump. And also the Google malware news came out at 10:10. So I really doubt it's the malware news. The Apple news came out at 10:55, which was 10 minutes ago versus an hour ago. So I don't think it's the malware news, even though that's not good either right now. ColdDriver is the malware. Okay, so that's the name of the malware. Yeah, dude, there was a cybersecurity threat yesterday. There were some headlines on that as well, as June points out right here. Ironically, CrowdStrike down 5%, not because of a cyber attack, but because they're having layoffs right here. CrowdStrike down 4.5%. Robinhood 49.50, Meta 591, and then Palantir 109.85. Let's switch to Besant. Let's see if he's saying anything else. We got the main headlines from him, but he's testifying right now. Let's see if there's anything else we can get from Besant here today.
International financial system. So here we go. Mr. Secretary, under the Biden administration, Congress required Treasury to determine whether any Chinese financial institutions were engaged in oil purchases from Iran, no matter how small or how large the transaction. This determination would subject these Chinese entities to...
Bro, this guy literally took off his glasses. You can tell how bored he is in this. You can tell how bored he's literally taking off his glasses. He's like, do I really have to answer these questions? I'm about to get on a flight to Switzerland and negotiate with the Chinese, but I'm here answering these questions.
Second, obviously the Ayatollah financed terrorism around the world. Mr. Secretary, can you describe how, well, I think we all know how Iran uses oil sales to fund its proxies, including Hamas, Hezbollah, the Houthis in Yemen, to the extent that there's any Yemen left. Treasury is now over half a year late with its statutory determination on Chinese buyers of Iranian oil. And I have three questions, sir, related to missing this deadline. The first is, why has it not been?
Okay, this is ridiculous. We're not going to listen to this. I have three questions, dude. He has 5 minutes. How's he going to answer three questions like this? I don't think we're getting anything out of that, folks. I don't think we're getting anything out of that. We got the China headlines. That's all we need. Everything else is just going to be random back and forth that he has with some of these Congress members. It looks like it's the Apple News, folks. It looks like it's the Apple News that's hurting Google. It looks like that's what's happening. The India-Pakistan stuff, I'll try to see if I can get some updates on that. It created some volatility yesterday after hours. I don't know if it's really continuing to affect the markets unless one side continues to retaliate. So, we could definitely see some issues there. But last night was mainly when that news broke, and now we're not seeing at least that many headlines this morning on that. Let's go to Dara from Uber, hear what he had to say about the earnings, because they had a pretty damn good earnings. I feel like the stock should be up like 5-6%. They crushed EPS by 60%. Stock relatively flat. Let's see his take on the state of the consumer, tariffs, and where he thinks Uber is going over the next couple months as well.
Pressure, if you will, or opportunity power do you really have?
We've actually, pricing has been an area, we want to keep rides business as affordable as possible. And if you look at the growth rate between kind of last quarter and this quarter, our gross bookings growth rate on mobility slowed down because we didn't take price. So last quarter, for example, price increased by 4%. This year, pricing was essentially flat. And that's really for two reasons. One is we saw the insurance costs. Insurance has been a huge factor in terms of inflation, not just in transportation, but also home insurance, as you know. We saw some relief in terms of insurance increases. We passed that on to the consumer as it relates to our mobility business. And we did see a slight mix shift in terms of trips to more international trips, especially as we saw outbound travel to the US slow down a bit compared to the overall travel sector internationally as well. So pricing is something we're very well aware of. And actually, we're happy to pass on some of the pricing relief we saw to our consumers.
What do you see in terms of the mix between the mobility businesses, the ride business effectively, and the Eats business at this point? So if we were to look today at a pie chart in terms of what the business looks like, mobility versus Eats today, and you sort of look a couple years out, what do you think that looks like?
Well, listen, it's like a Ferrari racing a Lamborghini. They're both going incredibly quickly. Mobility grew 19% on a year-on-year basis. Delivery delivered a second growth rate of 18%. The two are, pretty close to the same size. Mobility is a little bit bigger in terms of gross bookings, but our mobility and delivery businesses are hitting on all cylinders. I think it's going to be a great race, and I can't predict the outcome.
There does seem to be, though, a bit of a war going on.
All right, let's get some of this Apple coverage on Google. It looks like that's what's moving the stock right here. And then we'll keep going from there. Google still down a nasty 5%. Google does not move like that, but this headline is hurting shares right now. Hold on, let me reshare this. Okay, there we go.
Steve?
Yeah, Carl, this is off comments from Eddie Q. He's the head of services over at Apple. He's testifying right now in that DOJ trial where that Google already lost. They're trying to figure out the remedies here. But he said, according to several reports we're getting in, that searches in the browser using Google, obviously, fell for the first time in April. Now, the reason why Eddie Q is here testifying is because Apple collects up to $20 billion a year in payments from Google to be the default search engine when you open up your Safari browser on your phone and start typing in a search. That every time you do that, Google gets a revenue share from that. And now he's saying Google searches in that bar have gone down. And this is obviously a bad sign for Google as we talk so much about artificial intelligence eating into the market share. According to these headlines that we're getting, Q also said that they're looking at AI search alternatives within the iOS ecosystem, and mentioned by name companies like Perplexity, that AI search engine we talk about so much, and also Anthropic, a rival to ChatGPT. Obviously, ChatGPT is already integrated into the iOS system, although it's part of Siri, doesn't really.
Okay, one of you guys said something really smart in the chat. What if Apple's doing this to suck more money out of Google? What if Apple's just like saying, hey, we're going to go flirt with Perplexity and Anthropic to get Google to pay $25 billion for them to use Gemini or something? I mean, maybe that's what's happening there as well. But it also could be more so because of the antitrust stuff. They just don't want to work with Google as much. Oh, we're getting another headline. Apple and Microsoft moved to a year-on-year agreement on search. Hold on. Is that true? Apple and Microsoft? That would be... hold on, that's a pretty aggressive headline after this headline. Apple and Microsoft moved to a year-on-year agreement on search. What does that mean? Right after they say they're potentially exploring someone else outside of Google? Hold on, where's Google right here? Google, oh my gosh, bro. It's going down more. Timber, she's going down. You see that red candle right? 5. It was down 4.75. Now it's down 5.3. That's another 0.75. It took right after. I mean, literally in the past 30 seconds from this Microsoft news. What does that mean? Microsoft and Apple year-on-year search. Well, whatever it means, it's definitely not bullish googs right here. It's moving the whole market. Where's Microsoft? Microsoft is slightly flat. Apple, my goodness, down 2%. Whatever they're exposing at that testimony that Apple's having right now, definitely a lot of things coming out that the market doesn't like. And then the S&P is probably getting hit. S&P goes red. S&P goes red because of Google.
Really do search as straight up as Google does. It's not also in the Safari browser. So look, you see shares down 4.5%, 4.6% on these headlines coming from Eddie Q. And we're seeing, he also said, this is the quote, I think, of the whole thing. Q saying he's losing sleep over the possibility that Apple would lose the revenue share deal with Google, because that is one of the remedies the DOJ is looking here as it looks to finish up this case against Google, guys.
So we should remind viewers, Steve, for weeks now, we've been wading through sort of boutique data that looks at how search is being bypassed, right, by inquiries that go straight to AI. You would argue this is the first real ratification of that from an official voice?
Yeah, that is a perfect way to put it. We have Eddie Q here saying they're looking at the searches. Again, anytime you search something on iPhone in the Safari browser, and it goes to Google, that is a revenue share between those two companies. So, of course, Eddie Q is watching this every day, every month, every week, watching what these Google searches look like, because as people use it less and less, that means less money for Apple and less money for Google, guys.
I mean, anecdotally, Steve, I use it less. I go to Grok or ChatGPT more, even research as I'm preparing for shows. Google knew this was the existential threat and that this was coming. What is their answer to it?
Yeah, so Google is doing AI search as well, Sarah. So if you do go into Google now, type in a normal search query. You've probably noticed it before. At the very top now, they give you what they call an AI overview, which is sort of like what Perplexity or ChatGPT search will give you, and that's on top of the search results, although they have not really monetized it in the way that they do normal search. And this is a long-standing criticism of Google search that's become too stuffed with ads. It doesn't give you what you want organically right away. You have to kind of scroll around, get through all those ads and sponsored links and sponsored content to get to those organic results. And to your point, Sarah, if you go to ChatGPT or Perplexity or Grok Search or any of those other ones, it'll give you the exact answer you want right away without having to kind of dig around and poke around for it. So I'm with you, Sarah. I find myself using ChatGPT and Perplexity a lot more than Google, unless I'm looking for a very specific site. So here we go. This is the trend we're seeing. Apple looks like it's down about 1.5% here too, because again, this is a threat to Apple's services business. Google contributes as much as 1/5 of the services annual revenue to Apple.
Yeah.
Dude, this is not good for either company. I mean, for Google to lose that distribution and for Apple to lose that revenue. And again, the reason this is happening is because the DOJ has severely investigated Google, and they found out, or they've concluded that headline came out 2 weeks ago, that Google is in violation of being a monopoly when it comes to advertising. And they're in violation of antitrust laws by having a monopoly on digital advertising. So as a result, one of the ways to stop that monopoly, A, is to get them to divest from Chrome, which is one thing that could happen, but B, is to get them to not have access to 2.5 billion iOS devices and be the default search engine. Apple, I mean, 20% of their services revenue is coming from that Google deal. And I don't know exactly how many searches. Google does like 5 trillion searches a year. I don't know how many of them come from the iPhone, but I would imagine, a decent chunk of them do. That's not good for either or. I guess it's good for Perplexity and Anthropic. I mean, it's really good for, theoretically, Microsoft, which still owns 50% of OpenAI, right? Like, I mean, if this is all good for more traffic going back to a different provider of search, which ChatGPT is coming out with a ton of new search features over the coming months. Sam Altman talked about that 2 days ago. Then, I mean, I feel like theoretically, the people that own ChatGPT, whether it's a SoftBank, a VC fund, or Microsoft, should benefit. And the other company that should benefit, if we really want to stretch it out even further, is NVIDIA. Because imagine all those Google searches start going to ChatGPT. I mean, you need more compute. You need a lot more data centers. And so if it's not going to be split between Gemini, GPT, and Anthropic, it's going to go all to one of them, then that still could be something that is a tailwind for the broader AI sector and obviously semiconductor sector as a result of it as well. Olin talked about this on their last episode. Chamath was saying everyone who tries to stand up to Google search needs to be escorted from the building. I think I saw that clip. Let me pull it up right here and we'll take a look at what those guys said. But that was a big headline, dude, that I did not expect today. That is definitely affecting markets right here, and both of those companies being affected, which hurts the S&P. By the way, on OpenAI, I don't know if anyone saw this news on May 5th. I forgot to mention it, but they're not going to become a nonprofit anymore. They're not going to become a profit company anymore. OpenAI has decided that its nonprofit division will retain control over its for-profit organization after the company initially announced that it planned to convert to a for-profit organization. I don't know if this really matters, to be honest, in the grand scheme of things, whether it's a profit or nonprofit, but the transition to become a nonprofit is not as easy. I mean, Elon was right about the fact that it might not be as simple as Sam Altman thought about just transitioning from the constitutional bylaws that OpenAI laid out back in 2015 to become a profitable company. I still think that allows shareholders to get an ROI from their investment. I don't think that changes that part of the equation. But still, that could be something that we have to look at when it comes to OpenAI. All right, let's play that that Google clip from the All In, and then we'll keep going from there.
Same time that the space is actually changing at a pretty kind of crazy rate.
And let's take a look at our partner Polymarket and which company they think will have the best AI model by the end of 2025, and get feedback from our panel on if you think this is accurate and who you would pick here. Looks like Google is in the lead here. 41% of people believe that they will have the best AI model by the end of 2025.
What is the dimension? Like, we use Gemini. So for many tasks at 8090, we use Gemini. It's incredible. But for most of our code gen, we use Anthropic, and Claude kicks ass. It's exceptional.
This is based on the best scores in the chatbot arena, which just became a for-profit company.
Yeah.
So that is slightly different because people have gamed those tests. So that is a rub there. People are now building their AI model for the eval unit, right?
All the models are way overfitted.
Okay, we will go back to that clip in a second. I just got a call from somebody who is going to make all of you guys very happy as we wrap up the show today. Steve, how are you?
I got a good joke for you.
You have a good joke for me. Okay, let's hear this joke.
Apple exploring adding AI search.
Well, I mean, we were just talking about that, but what's the joke here?
No, that they're exploring adding AI search. That's the joke. Like, could they be any more behind?
Okay, I see what you're saying. I mean, yeah, obviously Apple should have built their own AI search thing years ago, right? But I mean, we were just talking about it, so it's timely that you called. Google's down 5% on this news, Steve. You've been a big advocate for Google. Do you think this warrants a 5% decline if they're going to lose the search revenue from Google?
I mean, what is it a year? 20 billion or something like that?
It's about 20 billion. And so Apple will lose the 20 billion, but more importantly, Google will lose the distribution, which is why the stock's down 5%. So do you think it's reasonable for the street to get upset about this?
At this point, nothing's for certain. So I think it's an overreaction until it's actually something.
Okay, well, let me take it a step further. Let's say the DOJ definitively forces Apple to divest from Google, and then they have to go to Perplexity or whatever, and Google loses that instant distribution to 2 billion people. I mean, is that bad?
It's not great.
I think with the declining search revenues that we saw this quarter, even though it was a monster quarter, but it did decline in terms of growth rates on search, I don't think you go full bearish, but it definitely gets people to think, wait a second.
Yeah, it's not great.
Yeah, it's not great.
You know what's really interesting?
What?
Palantir is holding its own.
That is true. Wow, I didn't even bring up Palantir, and you brought it up.
And congratulations on yesterday.
Oh, thank you. I appreciate it. I got through without coughing, so it was a good one. It was fun.
Which is incredible because you were coughing up a storm.
I know. I told you. I was like, Steve called me like for 5 minutes after, but we had to, quickly end the call because I couldn't stop coughing on the phone with you. So, okay. So I want to talk about Palantir, but to wrap it up on Google, like your immediate take right here is this is not good. Would it get you to like sell or anything? It's now down 6% or.
No.
Okay, so let me push back a little bit. If Google's losing their biggest search provider in terms of distribution, and the search revenues are slowing down, and 85% of the revenues are search, why wouldn't that be an easy bear case on Google?
85% of the revenue is not search.
I'm pretty sure it is.
Pretty sure it's not. I could be wrong, but
I'm going to pull it up right now. I think it's actually more than 85%, to be honest.
Stop it.
No, I'm serious. I'm serious. I'm gonna do the numbers right here, but they did what, 90 billion in revenue? Search was 50.7. Okay, so maybe it's not 80.7.
Yeah, it's not. It's like 60% or something like that.
Well, technically they're not counting a certain part of it that should be included in search, but okay, whatever. So like 60% of the revenues, that's still aggressive, right? Why is there not a bear case here for, did you Google search that? Yes, I Googled. Yes. Why is there not a bear case for the long-term forward multiple to decline if search goes down?
Google Cloud's growing at 28% year over year. YouTube is growing. It'll offset it if it gets hit.
I'm not that convinced by that. Cloud is not like the reason this thing is worth 2 trillion. Like, we know that. So when you tell me cloud is growing, it's not Amazon or Microsoft levels at all in terms of volume. It's growing faster. Well, not faster than Microsoft anymore, but I'm not saying I'm bearish here. I'm just saying, like, if you had to play devil's advocate right here and say, hey, if search revenue growth maybe search revenue doesn't slow down, but the growth rate of it slows down, which it already has been.
If search just stays where it is and everything else grows, it's still an undervalued company.
100%, especially with the share buybacks. I get, but like why would people be excited to buy it outside of its
Well,
undervaluation?
I'm not saying people would be excited to buy it. I'm just saying it's still an undervalued company.
Okay, here's another question. You think Apple's kind of flirting with some other girls to get Google's attention and trying to, say, oh, Perplexity is going to pay us a lot more or something? You think that kind of going on right here, or what do you think?
Maybe. I'll tell you, I'm more interested in Amazon right now.
Why?
I don't think people realize how big AI services through AWS is going to be. And I think this is going to sound crazy. I think we're in such an infancy on it that AWS can become $1 trillion run rate in the next decade or so.
No, I don't think that's crazy. I don't think that's crazy at all. Not
Yeah,
at
I
all.
went through all the numbers last night, wrote an article. I think that this is going to be much bigger than what people think.
Sorry, the audio got hit for a second. But essentially, Steve just said that AWS is going to continue to grow with their foundation models at a pretty pristine level. So, okay, so at that point, are you getting more bullish AWS over Google, or in general, you like both stocks?
Yeah, I think I'm going to buy some more Amazon. I mean, think about this. If I had told you last year that Amazon would be the third largest value company in the Spider Value ETF, you would have laughed at me probably, right?
Yeah.
Pull up SPYV and look at the holdings. Look at the top three companies as their value ETF. Look at the top three holdings.
Okay, let me pull that up. SPYV. Top three holdings are, wow, Apple, Microsoft, and Amazon.
In what world is Amazon a value company? Oh, wait, a world where you're valuing Costco at 45 times 2027 earnings and Amazon at 20 times.
Oh, that's fair. That's a fair point. Yeah, no,
I think Amazon is considered a value company with 44% forward growth over the next 2 years on EPS. It's incredible.
By the way, I was right on Google. So Google's advertising revenue is $72 billion. Divide that by 90, that's 80% of their revenues. So you could call it
search, not advertising.
Yeah, but it's the same
advertising. You're right.
But it's the same shit. Like,
no, it's not.
Advertising includes YouTube. YouTube is search. People search things on YouTube. Like, it's this
right, but it's a different division. It's not Google search.
Well, regardless, I mean, a majority of their money comes from people seeing ads. And if they can't show ads, that, it gets bearish. Now, granted, I think the valuation is, and you've done a really good job over the past couple of months explaining how unbelievably cheap this thing is. So I don't think it warrants going down even further. Another 6% is what we're seeing right now. But I guess the market is, trying to figure out, is this really going to be an AI name or not?
I mean, it's going to be an AI name. It's just people are getting worried. All right.
Would you buy the dip on Google here?
Yeah, I would.
You didn't seem that confident saying that, though. It's okay to be, I'm just curious, like, what's your sentiment?
I'm trying to chew. I'm trying to do like 5 things at once.
Of course you're trying to chew. Of course.
Well, I'm having a salad. I'm trying to be somewhat healthy right now.
Steve, you realize that so many people care about your thoughts. And when you come on the show and you're eating and trying to express your thoughts, we can hear you eating.
What do you want? I'm a savage.
And they get mad at me because they're like, hey, let the man eat. Let him eat.
You know what is very interesting? Pfizer.
Why? Why is
people are going to think I've lost my mind. At 23 a share, this thing is so undervalued. I mean, it's $22.90 a share. It's almost the lowest it's been in the past decade. I mean, 7.5% dividend. I'm just not going anywhere. Like, this is straight, in my opinion, paying 7.5 times this year's earnings. Very low for Pfizer.
So did you buy Pfizer yet or no?
I bought a little bit the other day. Not a lot. I bought a little bit.
Okay,
But
so
yeah, Pfizer's interesting. I got to tell you, they did a good job of convincing me to buy HIMS.
Oh, did you buy it? You bought HIMS?
And then buy, yeah, but I'm getting ready to start writing some cash secure puts on it.
Dude, they're gonna get you and me both to get into this thing.
I mean, I went through the numbers. I can't find the bear case.
I can't find the bear case in the number. Other than the short float, I can't find the bear case. And the short float is technically a bull case because it could squeeze.
The fact that this is 33% short, people think this is a fraudulent company.
Yeah, and I was listening to the founder on a podcast last night, and this is why I say founders should embrace the media. But when I listen to him, I'm like, this guy just does not sound like a fraud. He sounds like a really humble, genuine dude. You know?
I mean, dude, no debt, crazy earnings growth, free cash flow positive, EBITDA positive, net income positive. I mean,
it's hard to see I agree with you.
The only bear case is that there's nothing proprietary.
Yeah, there's no moat. Yeah.
But what could be a moat is if you reverse it and say, listen, they're the only one that's saying, send us a blood test and we're going to custom make everything for you. I mean, they're going to get into custom made vitamins, and the testosterone product they're going to put out later this year, I think, has a huge TAM.
I mean, what I see the bull case is they're becoming a customized health platform. I mean, essentially to dumb it down, an Amazon of healthcare. And people are like, well, what about Amazon doing that? I was like, well, sometimes big companies don't focus on little things. And Amazon has a lot of other stuff to worry about. And HIMS is perfect. Like, you know, why didn't Apple beat Spotify? Because Spotify figured out how to build a better music app. So,
I mean, look at these cash secure puts for next week. You could sell a $44 cash secured put and you're getting paid $1.50.
So let's do the math on that. 150
It's
divided
3.5%.
3.5.
Around that 3.3.
Okay, but so here's, is 44 a good price to pay? Is the question.
I have no idea.
I don't either.
What is that? 11% out of the money?
Roundabout, yeah.
I don't know.
That's the other thing. I want to write puts too, but I don't know if 44 is like, you know, valuation wise, yeah, it's cheap, but like momentum wise, given it's up 60% in the last month, is it?
Yeah, but it's still not. But once again, it was up as much as 73. It's still is
right.
Like, could this retrace? Like, this is something where you sell some cash secure puts, and then if it retraces, you wait for it to find another bottom. You start selling more at like 35. Oh no, the premiums are huge. Where it's interesting.
Any thoughts on ET today? This one is up 5%.
Yeah, I love ET. Especially when it phones home. How about that?
Okay, that joke I used too many times for you to steal it.
That's why I used it, because you love using that joke.
Dude, aren't you proud of me? I didn't make any stupid jokes on live TV yesterday.
I was waiting for it to come. She started laughing at one point with how much Palantir was up.
Dude, hold on, that was because I was like, the last sentence I said on the first question was, I know the valuation is aggressive, but I think the growth warrants it. And then immediately she starts chuckling. She's like, to double click on the market capitalization. And I was like, oh boy, here we go. Here's the question. Here's the question where she's like, hey, Amit, what the fuck, bro? Are you serious right now? And then, and then we got into it. So
yeah, look, I don't think ET gets past 20 anytime soon, or it's got an 8.5% yield. It is irreplicable. You can't reproduce its footprint. And I think it's just going to keep growing. And I think they're going to continue acquiring companies.
Yeah.
So I love them, Enterprise Pride Partners, and Kinder Morgan. The amount of energy we're going to need, these companies are going to benefit.
Google, Steve, 7% down. There she goes. I think no one, as bullish as they are, can be confident enough to say that this search stuff isn't an issue, at least for today. And that's why people aren't really buying the dip right here. Down 7%.
Yeah, look, they'll find the bottom. I just want Jensen to report on the 28th. I think we should set up a whole live meet for it.
A live what?
The 28th, I think we need to do a whole watch party somewhere.
I mean, we do a stream.
No. We need to go to a bar or restaurant.
We need to go to New York and have a full watch party for NVIDIA.
Think
But
so.
we know the stock's not really going to moon. I mean, in this macro with the China data, like I would be happy if it just stays flat or goes up 1 or 2, but I don't expect it to go up 10, 20%. Like that, I don't see that happen.
Yeah, we'll see.
So it would, I mean, last time people had a bar party and they were disappointed when the stock did nothing, but it would be fun one day in person. We need to do that for Palantir one day as well. That would be really fun. In terms of NVIDIA, yeah, I think it's, I mean, do you think it has potential to really pump on earnings? Or,
I do.
I don't. I think it'll have a good earnings, but I don't think we see a big pump. I really don't. I think until we get China stuff resolved, I think there's too many headwinds, even if the numbers are good, for this thing to go back to 130 that easily. Like, I don't see that on earnings. I really don't. And there's just too much stuff out there. I think it'll eventually get back to 130 this year, but not just on earnings. Unless earnings, I mean, if they show crazy growth, even with the China headwinds, I would be impressed. And I think the market would be like, yep, it's AI revolution.
I want to see what their guidance is because not a single company that we care about has said they're spending less money.
Yeah, but all of that, see, agreed, but all of that is already baked into the earnings estimates. What wasn't baked in was losing China revenue, which now is a headwind. And then the question becomes, did NVIDIA close enough deals with an XAI or an OpenAI or something to just inch up those estimates even more than what, like the Google stuff, the hyperscale, all of that was confirmed 3 quarters ago. We knew that that would play out the way it's playing out.
A lot can change in 3 weeks. Let's see if they get a China deal done.
Yeah, I mean, the Cent's going to Switzerland. I don't think a deal is going to get done anytime soon, but they're starting, which is good. And that's important. Can we talk about Palantir? So you said it's holding up 109. You know, I mean, I'm pretty impressed that it's holding these levels after those earnings. How are you thinking of how the stock's reacting right now?
Yeah, I'm impressed. I mean, I think it's going to sell off, but I think it's definitely bullish that it's trying to find a floor here.
I wouldn't say it's bearish.
I mean, look, for me, the fact that it did not exceed EPS is a problem. And the fact that the Fed is expected to start cutting in June or July, and Palantir is still diluting shareholders by issuing more shares, is going to make EPS comps harder to hit. If they don't exceed growth expectations, which they probably will, it's going to become increasingly hard for them to beat on EPS. And if they have another quarter or two where they meet expectations, I don't think the stock's going to do much. And God forbid they miss EPS, forget it.
So I don't think they're going to miss. I think they're in their growth stage. They're not going to miss expectations. Number two, I think if they settle in a range from 100 to 120, even for the next year, it wouldn't be that fun for shareholders because we wouldn't get to see our net worth continue to go higher, but it would give them some time to really grow into the valuation, even though the valuation would still be pretty extended. So, I mean, I find this incredibly bullish that it's holding triple digits. Maybe we get a macro event that takes it down.
I don't think it stays above 100, but that's nice.
But you think there would be a macro reason it doesn't stay above 100, or just the stock will collapse?
No, I think the range is going to be 70 to 100. I think that's going to be the range it ultimately settles on. The market's up a lot today.
But what if the range becomes 100 to 120? Like, what if that happens?
It could. It absolutely could. I would not bet money that becomes the range, but it could.
Yeah, I think we need at least another month of data to see if it could become the range. But
yeah, I mean, look, the market's up today. We got to see what happens. And at the end of the day, if the market starts to really rebound, if trade deals get approved and everything, Palantir could go back to 125. But I just think that the numbers support a lower valuation, and I think ultimately that's where it's going to settle. I think there's a lot of opportunities out there, and I don't think Palantir is an opportunity at these levels because the chances of it getting 150 after sliding on this earnings report is very slim.
I don't even care about 150 anymore. But if we keep triple digits to me, and we normalize that, I think that would be pretty cool.
Listen, it would be great for a lot of people. My thing is, after looking at a couple of companies, I think there's some real opportunities that people may shift into. I mean, look, when I went through the numbers on HIMS, I can normally find stuff to nitpick on. I couldn't find it.
Yeah. I agree. I looked at the numbers. I couldn't find anything wrong. I really couldn't.
I could not find anything to nitpick on. And it actually trades at a decent valuation also when you factor in all the forward growth.
It's more than decent. It's freaking cheap. Even at 50 bucks, it is cheap.
Right.
I just think there's a lot of volatility. I mean, if you buy it, you got to be ready for it to go down back to 40 easily, you know?
Well, I got to tell you, I was thinking about selling a quarter of my SoFi position and moving into HIMS.
That would be... Okay, so explain to me the logic. Why?
So the logic is I think SoFi is just a bank. I don't think they're a tech company anymore. And until they prove me otherwise, I will continue to say that because they're generating less than 13% of their revenue from tech.
Okay, to push back, we've got rate cuts coming, which would be great for loan originations. Why would
I'm not saying SoFi is not going to do well. I'm just saying that my bull thesis was for it to get a hybrid or a tech valuation. The only other bank that I know of that's getting more than double book value is JP Morgan. I don't think SoFi is going to trade at 3 or 4x book value on just being a financial institution. And if it doesn't look like they can become a real tech company, I have to try to figure out a way where the loan platform expands so much that it drives book value to like 12.
Right.
Which is almost double where it is now in order for it to get past 20. I don't know that I see that happening in the next year. And I think HIMS is a lot more interesting at this point. Now, if Noto comes out and starts talking about winning RFPs and what type of revenue they're going to generate from tech, I can completely change my stance. I don't see it at this point.
Well, one thing is, if we get rate cuts and they have crazy amounts of loan originations on the loan platform, not just the pure lending part of the business, I wonder if the street gives it a tech multiple based on the loan platform growth. Now, loan platform's already growing at 60%, and the street's not really caring right now for whatever reason. Because
but the loan platform's not tech. It's traditional banking.
Okay, so people have been talking about why is there no tech associated with this at all? Like Upstart is a tech company, people say, and they do AI lending, right? Essentially.
Why are they a tech company? Because they don't have a physical footprint?
Well, because AI lending, you know, so the AIs. That's.
You're telling me that Citigroup doesn't use AI or Bank of America doesn't use AI? They're banks. They deploy more in AI resources than these companies are worth.
Yeah, that's fair. That's a fair point. Upstart right by here, by the way, guys, they beat on EPS by like 40% yesterday, down 10%. So the street's not really loving their loan platform business either. And maybe they're thinking SoFi is going to, threaten their loan platform business as well. Okay, so the move is sell what, a third of your SoFi and buy HIMS, or sell puts on HIMS with the cash. That's what you're thinking.
I may sell a quarter of it. We'll see. I got a few things coming up that I need to move some money around anyway. I mean, once rate cuts happen, after the initial pump, I'm probably going to get out of SL Green. So.
All right, so that gets to my last question for today. Jay Powell, he's talking in an hour and a half. What do you think he's going to say?
Hawkish pause. Got to see the impact of tariffs and trade deals. Paying very close attention to everything. We reserve the right to cut, but not this month.
And you don't think he's going to be dovish with the pause because he's still afraid of the tariffs?
No.
I'm going to go the opposite. I'm going to go contrarian. I'm going to say that Jay Powell is looking at Trump for who he is, which is a guy who just says anything. He's looking at Bessent as the actual person who's navigating tariffs. And he's going to have it in his heart, in his soul, to be dovish because he knows that we're going to walk back these tariffs eventually and that there's no need to have the federal funds rate as high as it is. if tariffs are walking back. Do you think that thesis at all could play out today?
It could. It's not going to, though.
Okay, so you think it's not going to happen?
Look at where oil is. That's the other thing. Oil's under 60. It was trading at 60 back in the beginning of April. Got up back to 65. Now it's under 60 again. We're also going to have the ramifications of that going through the inputs, gasoline prices, fuel prices over the next month or so.
No, but this should be a reason he should be dovish today, right?
And he should be cutting today. He's not going to.
Yeah, we're not going to get a cut, but I just like with oil trading at these levels, I don't want to believe he's going to be a hawk when he knows inflation's coming down. And then he also should know that Trump's not going to impose these ridiculous tariffs for the next 4 years because we're in a recession. So like, I know he has to take him at face value, but if he reads between the lines, he should be able to tell, hey, these tariffs are probably going away, which means I have the liberty to cut.
You're talking about the guy who called inflation transitory, reading between the lines. It's not going to happen.
I know. And that's the hard part about this. That's the hard part. All right. There we go. Steve, thanks for being here. What are you eating, by the way? Are you eating eggs again today? Or no, you said salad.
No, I went to the Amish market and got a nice pure salad.
Is there like chicken in the salad and meat or just pure grass?
Yeah. Romaine, chicken, carrots, broccoli, roasted corn, red onion, salt, pepper, lemon.
What type of dressing do you use on your salad?
Salt, pepper, lemon.
Oh, okay. All right. I'm happy you enjoyed your salad. We all got to enjoy it with you, quite frankly. So
listen, it was very good. You got to come in so I can take you for chicken parms.
Dude, we got to do our
dinner.
We got to do our dinner or our lunch or whatever.
Definitely, we can go for steaks also. But I mean, I am very annoyed that you're not eating like good chicken parms.
Someone said you had a skinny girl salad.
I mean, I guess, I don't know.
Oh my gosh. Dude, I've seen Steve eat. Like, dude, when me and Steve had our dinner like 2 months ago, we had a steak dinner. That night, he texted me a picture. You remember, Steve? What'd you text me?
A pint of ice cream?
No, Chick-fil-A. I was like, bro, we just had a massive dinner at Ben and Jack's. He's like, yeah, I'm hungry. Like, this guy can eat.
Yeah, I don't stop. Like, I don't stop either. What can I say?
All right. Google down 7%. We'll probably talk more about it tomorrow. Steve, thanks for joining. And we'll talk to you tomorrow. Later. Google, man. Nasty decline. I still own my Google, so I'm still long Google. I'm feeling the pain as much as you guys are. But 7% down. That's aggressive, dude. Did not think it would be that aggressive on an Apple. It's not even confirmed news. It's just like a headline that could happen eventually in the future. Street doesn't want anything to do with it today. They don't want anything to do with it. I do not have Snapchat. I DCA'd on Snapchat, and then I got out of it at 8:45. So I took my average to like 8:42, got out at 8:45. And I think I made like $100. And I got out of that one. So no Snap, but I do own Google. And Street's not liking it. Street's not liking it at all right now. NVIDIA is going green. Is NVIDIA getting a little green right here? There's a little bit of green candle. NVIDIA. Guys, I don't think NVIDIA is gapping up on earnings. I really don't. And I'm bullish NVIDIA. But I don't think this thing gaps up 10, 20% back to the 130s. I mean, like, the market environment right now is not strong enough to have the S&P trading at 560 and NVIDIA going back to 130, 135. Like, if NVIDIA is going up, it's the whole market going up. I really don't think NVIDIA independent, because the thing is, if NVIDIA goes up, the semis have to follow it. They have to. There's no way the semis aren't going to be flat. NVIDIA's not independently going to be up, and Micron and Dell and SMC are going to be flat. Like, so I think you need a broader market rally to see NVIDIA go up. On the earnings, I'm just hoping that it's good, even if it's not great, given all the China volatility. And if the stock hovers around 115 to 120, which is basically where my average is, that's fine with me. I don't really care. But the idea that it gaps up, I don't see that. And I'd be really happy if it does, but I don't see that, at least for Q1. But again, if you're long NVIDIA, I think this is just accumulation time. And, you know, maybe in the next coming quarters, we see that momentum heat up. All right, cool. That's it for today. Two things. Number one, Houston meetup. So the Houston meetup form is in the chat right now. It's pinned on the chat. I am not sure if we are definitely doing Houston for the meetup. And the reason for that is because I don't know how many of you guys are actually in Houston. I got a lot of messages over the past couple of days saying you guys are in Dallas and Austin, and Houston, not only in and of itself is super big, but it's far away from Dallas and Austin. I don't know how many people want to travel all the way to Houston. So I'm still doing my own research on if Houston is the right place to do the meetup in. So if you are there, please fill out this form because I need to see if people are actually there. Houston is not like Toronto, where although Toronto is a big city, it's like there's a downtown area. Everyone kind of knows the main restaurants, clubs, etc. So everyone can kind of know that, hey, if it's this location, people aren't relatively that far away. Same thing with New York. New York City is a big city, but there's you can find a location and everyone knows how to get there. Houston, from what I understand, is the size of Connecticut. So it's a really big city inside. I mean, on the form, I asked you guys to say which part of Houston are you from. There's 8 different parts of Houston. There's Sugarland, Spring, Katy, the Woodlands, League City, Baytown, Conroe, Galveston. I'm like, there's all these different parts of Houston. It's not just Houston. So I don't know. Maybe it's not the best spot for the meetup itself. So I need to know. I need to really see how many people actually could feasibly make it, and then we'll come to a conclusion right here. Sugarland sounds fake. Well, that's the name of the city, Sugarland. So then a lot of you guys have been saying Dallas too, bro. So like, I don't know. I think more people might be in Dallas than in Houston, which means Dallas might make more sense, to be honest. NVIDIA right here, 114. So I got to figure this out. It takes 3 hours from one side of Houston to the other. See, that's the issue, bro. That wasn't the same in the Bay Area, New York, or Toronto. It was just everything was pretty centralized in one area. So yeah, I mean, if it's not feasible, then we're gonna have to figure out. Maybe we change it from Houston to a different location. Maybe we push it to June to give it more time instead of May. But I just need some data to figure this out. We will do LA in September. LA is definitely happening. Vegas is happening in September. LA is happening probably September, October. Miami, I believe, is happening in August. I'm trying to begin setting that up. That one should be happening. And then the UK is still set up for June. I will let you guys know officially, but I think the UK in June will be happening. And then, yeah, we'll do New York again. We did New York in January. We'll do it again, probably October, November as well. Miami, Seattle, Miami. Yeah, a lot of you guys are saying we'll definitely do Miami. See, I know a lot of you guys are in Miami because you guys have said it so many times, but you guys haven't really said Houston as much. You've said Texas more broadly, and I know people in Houston, so I'm picking Houston, but I need to make sure there's actually enough to meaningfully do it. Okay, Portugal is not on the list, but I would love to go. My high school had a lot of Portuguese people, a lot of Portuguese and Brazilian people. It was in the downtown area of Newark, New Jersey, which is like all Portuguese and Brazilian. And I learned about soccer in high school because everyone just cared about soccer. So I would love to visit Portugal one day. But that is not on the plan for 2025. 2026, I think we'll do a lot more international. That's also why I don't want to buy a house, because we're going to be traveling so much. There's just no point of actually owning the property there. All right, cool. So yeah, if you're in Houston, please fill that out. I will take a couple days and see what the data looks like for Houston, and then we'll make a decision and we'll see what we have to do for Texas. And if it doesn't work on Houston, then we'll figure it out. Maybe we do Dallas or Austin, or maybe we just delay it for a month and try to pick a location that's a bit easier to plan. Boston is also not crazy for Austin. For May, I'm going to make a Boston form and send that out tomorrow because I'm very close to Boston. It's really easy for me to go. For Houston, I have to take a flight. It's just a lot more logistics. For Boston, it's like 4 hours away. So we could do a meetup in May, even if it's not Houston, something a little bit simpler. Boston's also a relatively small city, so there's a very easy way to set that up. And then we just delay Houston for another month. So I'll just take a look at the data and then we'll figure it out. Chicago also is on the list. Chicago's on the list. We'll try to get Chicago done by the end. So basically LA, Vegas, Chicago, Houston / Texas, Boston, and then the UK, and then Miami. Those are the last 7 that we got. And then we'll do New York again in the fall because it's very close to me. So those 8 towards the end of the year, I think are going to be the ones. All right, cool. That is it. Word of the day. Let's do that. And then we will be done. Word of the day. What is this? This feels like a German word right now. Dubai's not on the list, but next year we'll do all the international stuff with Dubai and all these other ones. But this year is going to be a little tough to do Dubai. I think this is German. Gemütlich.
Gemütlich.
Comfortable and pleasant. Jane had a way of making people feel gemütlich, even though those guests who hadn't originally thrilled to go to the party. The flickering lanterns among the cobblestone lanes gave the village its gemütlich atmosphere.
Gemütlich.
This is a fun one. All right. Comfortable and pleasant. Unfortunately, this Apple news for Googs was not gemütlich. Google 7.2. My goodness. It was 6.7 5 minutes ago. Another 0.45% down. It looks like she wants below 150. It looks like she wants below 150. All the Germans in the chat are probably upset at how I'm pronouncing it, but gemütlich. Never heard that word before. I like that one. It's a good one. My uncle in the chat right here is saying, come to Singapore with Vlad and open Singapore office in Hood. So we're definitely doing Singapore in 2026 as well. Because A, I want to go see my uncle. B, a lot of you guys are in Singapore, and that would be super fun. Also, I mean, if Robinhood is setting up a office in Singapore, from my understanding. That's going to be like their Central Asia hub. And so it would be really cool if, like, they launch it and we go there at the same time. The thing is, they're going to launch it at the end of the year. I'll probably go there 2026, so probably won't be there at the same time. But that would be super fun to, like, just even visit their office in Singapore and see the start of their Asian journey as well. So, yeah, Singapore will be on the list for 2026. Unfortunately, I don't live in Singapore. I love America, but, my uncle gets to brag about 0 capital gain taxes, which is insanity, dude. Insanity. Singapore is like one of the finance capitals of the world. 0 capital gains. I mean, you're going to attract a lot of money for people that just don't have to worry about taxes there. But in Singapore, most people don't own a car. So there's definitely other trade-offs with the lifestyle of living there as well. If Hood does that, does Grab go into trouble? I've actually been thinking about this. How much of a threat would Hood be to Grab? And what I've concluded is, A, Hood will be offering a brokerage service, which Grab's not getting into, so that's not really a threat. B, Grab's fintech opportunity is not in Singapore. It's just not. It's in Malaysia. It's in Thailand. It's in Indonesia. It's in Vietnam. Like, Singapore already has so many, like, fintechs and financial companies that are aiming for users' attention that I don't think Grab was ever going to be like a big fintech company because of Singapore. It was going to be because of all the other hundreds of millions of people in Southeast Asia that are unbanked. Now, if Robinhood tries to go after, the entire Southeast Asian region, then yeah, that's going to be a competitive threat. I don't know if Robinhood is necessarily that expansive with their goals in the short term because, they've got to dominate the US, they've got to be able to get into Europe, etc. But if Robinhood tries to go after deposits in Singapore, I mean, yeah, that's going to be competitive with Grab, 100%. And I kind of wouldn't hate that because if Robinhood wins, then good. That's great for Robinhood. If Robinhood loses in Singapore, that's good for Grab. So to me, owning both right there is not necessarily the worst situation. But I think Grab's overall fintech opportunity, it is not in Singapore. It's going to be in Southeast Asia. And there's a lot of other countries that they're going after. Again, real quick, for those that missed the news today, Reuters reporting that Grab is in serious talks to acquire Goto in Q2 of this year. Many sources told Reuters that they are now hiring advisors and consultants across the board to work on the proposed deal. And hopefully by the end of Q2, we end up seeing if this can play out. So big stuff, and we will follow along that story over the coming months. All right, that's it for me. Houston meetup form, I'm putting again in the chat. Let me know. Please sign up over the next couple of days if you're in Houston, and I will try to get as much data as I can to try to figure out if Houston is right for the end of May for the meetup. I will be streaming Powell at 2:20. So we got 2 hours. Go get some lunch. I'll be back at 2:20 p.m. Eastern. We'll get the decision at 2 p.m. Eastern. And then at 2:30, we will see if Powell can be a little dovish. I'm going to go contrarian to Steve. Let's do that one last poll. One last poll. Dovish or hawkish Powell? Dovish or hawkish? Dovish or hawkish? I'm going to say he's going to be dovish. I think Powell's going to use his brain and say inflation's falling off a cliff. Trump's tariffs are going to go away. The only reason I'm not cutting is because I'm so afraid of his tariffs. But if tariffs go away, then there's no other reason because inflation's falling off a cliff. So I'm going to tell the market, hey, you should expect a cut in June. Now, I'm probably wrong about this because the Fed probabilities are showing a less than 30% chance for a cut in June. So the odds are against Powell being dovish. The odds are definitely on the side of him being hawkish. But if there's any bit of dovishness there, maybe we get to keep some of the momentum we've had over the past month for the broader markets. So there we go. 57% of you say dovish. All right. 57%. Fed put confirmed. Yeah. I mean, like, is Powell going to give us the Fed put? I guess is really what we're thinking about. He hates Trump. I don't think he's a fan of Trump, but hopefully he knows that Trump is not going to have these tariffs be as aggressive as they are a year from now. And that's enough to cut rates. But, you know, if he doesn't think that, then we're going to have to see how hawkish he is today. Dovish just means bullish. Hawkish just means bearish. That's all it means. That's what the terminology refers to. All right, cool. That's it. I'll be back in an hour or 2 hours. Again, thank you, everybody, for the outpouring of support on the Bloomberg video. For those that haven't seen it, it's on YouTube. If you go to my videos, I posted it yesterday. Again, really, really, really meant the world to me for everyone reaching out. It was just an incredible opportunity. I kind of liked it. I know I do independent media, but it was kind of fun to have 5 minutes and get asked questions, and you have to try to get out as much as you can in those 5 minutes, and definitely exposed me to a broader audience. But it means the world. I think I'll end it up by just reading what I wrote this on Twitter last night. I was up at 2 a.m. I was thinking about it. I wrote this up, and so I'll just read what I wrote, and then we'll end it out here. So I wrote, it's been a really long journey to get here, and it would be hard to even explain how it started. I suppose sometimes you just embrace the unknown and take advantage of every opportunity that comes your way in hopes of figuring it out. I just want to say that I will never, ever take any of this for granted, and the outpouring of support has me beyond emotional. It's hard to believe that these many people feel genuinely happy for someone else, and it is very rare for people to want to actually see you succeed and keep going further in life. I really appreciate everyone who's reached out to me, and the one thing I will hold myself accountable to is to never forget why this is happening. It's 1% me and 99% people that actually find joy in wanting to support me because of the value they get from my content. When I mean joy, I mean just the genuine joy that I've seen people show me. Just purely unconditional, unselfish joy that people had for something that happened in my professional life. It's not me at this point. It's everyone else who actually cares to support me on this journey. None of it at all is possible without you all actually caring about the content for someone who thinks of himself more as a creative before as an entrepreneur and an investor. It is a dream to be able to create. It is a privilege to be able to even chase this dream. And it is something I will never take for granted when I see so many people who care enough to congratulate me on a milestone in my own life. So thank you again, everybody, from the bottom of my heart. Appreciate you all. Thank you, everyone, for being here. We'll be back at 2 p.m. for JPOW. And hopefully he gets a little dovish. And there is no AK Media. This joke is not going to die. I am not the CEO of anything. I'm just a MIT. They needed a freaking title for me. So I told them CEO of AK. I should have said AK-47 Media. That would have been funny. I'm the CEO of AK-47. And, I would have found a way to take some shot joke in there and be like, I like to take shots at the market or something. But that would have got me, they probably wouldn't have invited me back to Bloomberg if I said that. So I'm proud of myself that I didn't cough. And I'm really proud I didn't make a shitty joke. Because trust me, in the back of my head while I was talking, there's a couple that popped in and I really did refrain because I was like, not today. Not today. I can do it. I can do it with you guys. You guys will forgive me. I don't know if the Bloombergs of the world will forgive me. So that's one good thing that we did yesterday. Times New York reported AK Media is legit. Yes, I didn't say New York Times. I said Times New York. We had a little bit of mispronunciations there, but overall, hopefully it went well. So There we go. Thank you, everybody. Appreciate it. Means the world. I'll see you guys in 2 hours for JPal. Bye, everybody. Have a good one.